Three, two, one. Here we are, Anthony, back live again. An unexpected live broadcast this week, you guys. We were expecting to be on with Hive today. We've moved that interview. We're going to give you a recap of all of the interviews we have scheduled in a couple of seconds here. But luckily enough for us, provided a great break this week, Anthony, for us to get on here and talk about some of the current events, the news, the earnings that are really just flooding the market this week. There's a ton going on in the sector. Obviously, there's a lot going on in terms of the price of Bitcoin as well. The miner share prices, we'll get into that today, market caps. But in general, Anthony, just nice to get on and do an update presentation or discussion with the flurry of news we've seen here this week, eh?
Yeah, absolutely. We've got so many CEOs booked in that we didn't really have any time for our own. So finding a space in the schedule this week to do one together is come at the right time. So looking forward to this one.
Yeah, these CEOs, they won't leave us alone, Anthony, but I guess that's a good problem to have. Now, I creatively used the word flurry of news, and that was no mistake there, Anthony, because we also had Patrick Fleury on last night from TeraWulf. A very strong interview. There's a lot going on at this company. TeraWulf's a top 3 hold for me. There's so many things I like about this organization. What were your thoughts kind of coming out of that interview with Patrick, Anthony, last night?
Oh, I mean, Patrick's probably one of the most respected people in the Bitcoin mining space. I mean, he's a CFO at TeraWulf. He's got 25 years, background in finance. He's worked on the sell side. He knows the team at TeraWulf before he even got there. That team at TeraWulf have been together a long, long time, longer than any other mining company. We're talking nearly 20 years some of these people have been together. So when you've got a team dedicated to working with each other that well, have the same goal, the same aspiration, they own a big chunk of the company, so that then sets them differently from pretty much every other miner. They've got some like 30% of the company. And, Patrick came on and basically took us through the earnings, which were good earnings. In terms of, we know August is going to be not a great month in terms of net income, because all the miners will produce a net loss in August. That was anticipated with the Bitcoin price, with the halving. But if you can have a good bad update, they had a good bad update. So, and he talks us through the energy prices that they're paying and how key energy is to any of these Bitcoin miners making it. And we'll keep reiterating that as we go through some of these other updates as well, because energy is the key factor. We talked before about, post-halving, what 3 things you need. You need the lowest price energy. You need the most efficient miners. You need cash on the balance sheet. How relevant are those 3 now to everybody going through?
No kidding. Now, Jane Smith, who's one of our biggest fans here, Anthony, says if you're going to do your own research, cost of power, electricity is the name of the game, which is exactly what you just stated there. So we're going to get into that as we move through today's presentation. We've got a lot on the agenda. First and foremost, though, Anthony, is the price of Bitcoin itself. So interesting observation. We've seen Bitcoin kind of hovering in this 55, 56 to 60 range for quite some time. This is a 5-day chart. You can see some big pullbacks or drawdowns, Anthony, interestingly enough, timed very closely to when the US markets opened. So I highlighted there basically just pre-market this morning. Bitcoin was at 61,700. And then you can see as the US equity markets open, it just drops like a rock, 59,251. What do you mark this up or chalk this up to, Anthony?
I mean, the other thing it possibly could be is the fact that we know Bitcoin is traded, as an asset class, and so people can go and literally gamble on the price going up or down, and so effectively you've probably got a lot out there. There doesn't appear to be a lot of Bitcoin being sold on a regular basis. The holders tend to be holding Bitcoin. We've seen those graphs before. How many people have held Bitcoin for 2 years or 5 years, and the numbers are enormous. And then you've got the ETFs who've been buying Bitcoin predominantly. Those first 6 months bought it, as much as, far more than was being produced. Far more was being produced. Some days it was 10 times, 12 times the production levels. And we saw a little bit of a pullback in early August. But the price, I've said to you before, because I'm 5, 6 hours, 7 hours ahead of you, Bryce, it's, I see the Bitcoin price in the morning when I get up, and it's from the Asia close, it's looking okay. But as soon as we get to, Eastern time open, the price just drops, and then you see the mining stocks drop as well. So there seems to be some correlation there, but I put it down to maybe people just moving the price of Bitcoin on shorts and longs over a very short period. So we've had this sort of band now, like you say, 58, 65. We're looking for the next move up. So hopefully we'll get some insight from our good friend Freedom by 40, who can maybe give us a graph that we can include in our next update to see where he thinks Bitcoin's going in terms of the technical analysis. That'd be a good indicator.
There you go. I was actually looking at a few of his graphs this morning. Still looks pretty bullish from Freedom's perspective. However, we did take a little bit of a pullback that was unanticipated there. So Bitcoin price bobbing around as usual. Miners are moving around pretty much in tandem as we see hash price, Anthony, kind of still hovering in that low 40 range, making it pretty difficult for miners to eke out a profit. We're going to talk about energy costs, specifically IREN. We've got some information on HUD 8, Wulf, TeraWulf from last night. We'll talk about some of these energy prices throughout today's conversation. That's really the theme. But with these specific hash prices right now, Anthony, it's tough sledding out there, eh?
Yeah. I mean, this is lower than we thought before the what the halving would be, because it was $110 per petahash per day before the halving. So half of that is 55, but we saw it drop down to we didn't go as low as $34, $35 a petahash, which is really low. I mean, that is marginal then for miners to be actually switched on. I mean, some of them will be paying far more than that in electricity costs. If you're hosted, you've got to have a hosting fee on top of that as well. So, but we do know, probably like the likes of TeraWulf, the likes of Cypher, the likes of Soluna, maybe Riot have energy cheap enough to keep the machines on at that level and still make a reasonable margin. But some of the others, it'll be a challenge.
Yeah, it certainly will. Now, we've got a couple other graphs here, Anthony, before we get into the miner-specific data. HUD 8, we're going to talk about them in a second here. We've actually got Asher and Sue scheduled to come on the channel next week. They're leading the pack, at least at the time this screenshot was taken. I'm not sure if it's changed, Anthony, or not. Up about 5.5%. Again, a mixed day for the miners. Core Scientific, nice to be bouncing back from yesterday. They took a bit of a haircut, about 10%. We'll get into that debt swap deal they did, but any surprises on this one?
Yeah, I mean, if you're looking at current prices now, CORZ are probably at the top of the tree at the moment. HUD have pulled back now to just over 2.5% up. So half the miners in the green, half of them in the red. And it's just probably just typical of the price action with Bitcoin, to be honest. There's not any sort of like real significant moves. We did see some big moves earlier in the week. We had Mawson jumped up, I think, nearly over 70% on Monday. Caught people by surprise. I think it was their update regarding their move into the AI HPC space with their client, and therefore, the market looked at that as a very bullish signal. And we'll come on to talk about HPC further in the podcast. But yeah, the miners are still generally down since in the last month or so. When they got to their sort of like 2024 highs. So we've seen quite a bit of a pullback. Some of these shares were close to twice the amount 3 or 4 weeks ago. You look at CleanSpark, it's $11 now. I mean, back in end of March, it was $24 a share. Marathon shares, $15 at the moment. It was $27 a couple of weeks ago. And that's the same for many of these shares on there. Riot shares were probably more than twice that price earlier in the year as well. So, some of them taking quite a hit. Core shares have done quite well this year, but if you think about the year that CORZ have had, I mean, to be honest, 2024 has been the year of CORZ up to now. No other miner can possibly come anywhere near the amount of significant updates that they brought out in the space of 7 months. I mean, it's been extraordinary. I mean, they only came out of Chapter 11 on the 24th of January, had to re-IPO their shares, came out with a plan, and a plan is a plan. Who knows how the plan's going to work out, but the plan worked out really well. They got rid of some of the debt very, very quickly. all the warrants have been triggered. And so, and we'll cover a little bit more of CORZ, but it has been the year of CORZ, and you can see why, their share price on a day-to-day basis is generally doing quite well compared to peers.
Yeah, pretty much textbook execution from Adam Sullivan and team coming out of that Chapter 11, Anthony. I don't think there's many people in the world that could navigate that waters like his team has. And the amount of consistency that CORZ has displayed throughout this process, they've been mining plus or minus 10% of the same Bitcoin every single day for as long as I remember CORZ.
We talked about in our podcast over the last sort of 6 months, we've talked about the likes of Bitfarms reducing 160 million in debt in 20 months. We talked about TeraWulf reducing 140 million debt in sort of in the last sort of year or so. We haven't talked, Core Scientific had over $1 billion of debt. And that's literally wiped away now. So with today's update, that's effectively wiped away. The debt's gone now. They have a smaller amount of debt in the term of a note, and with a very low percentage. So they've got rid of debt that had a higher percentage. That's off the balance sheet then, and it really stands them in good stead for even further. So it's like they're like on a hamster wheel of success at the moment, because everything they're doing it right, and it leads to the next piece of good news.
And not only did they wipe the debt, they created a $4.7 billion HPC behemoth business in the process, and remained one of the top Bitcoin miners in this space. Well, so really, hats off.
4.7 net profit. I mean, we're talking 6.7 billion in revenues over the next 12 years, but 4.7 billion in profit. So let that one just sink in a little bit longer. It's over 400 million a year, 1.22 million of net profit every day. Yes, people say, well, when the revenue's coming in, start in the first half of 2025. That first 200 megawatts work's already started now, so they've already been starting to refurbish sites, flatten buildings to put in the new infrastructure for the for this process for the CoreWeave contract there. So the revenues will start coming in the first half of 2025, and then the second and third addition to that contract, the extra 70 megawatts, the extra 112 megawatts, take them to a total of 382 megawatts currently. Still got another 180 megawatts in the bank there for either the same client or other clients, because they've said they'll give 500 megawatts to this space. And who can blame them with the predictability of those revenues and those margins coming through? And that playbook now is going to be adopted, or try to be adopted, by every other miner. And the question will be: will every other miner get the sort of deal that Core Scientific did, or will they be able to get a better deal, or maybe not as good a deal? That'll be the interesting part.
Yeah, it sure will. It's hard to imagine a better deal with Core Scientific, but as we say, time will tell. I just wanted to call out Nelson. You say enough with the bloodbath. Honestly, buddy, I've been feeling the same way. The mental strain and stress that trading takes on you is something that needs to be talked about and learned. I often think night is darkest just before dawn, and it seems like that saying is always true in the investment community. The only thing I can say to you here is hopefully you have some money on the sideline. I know I really don't at this point. I'm almost fully deployed in terms of my positions, but I do have the highest confidence that this will turn around. My own portfolio, Anthony, I'm nearing in on a $100,000 swing from the highs last month, and it's difficult no matter how many times you do that, right? Big swings, you start thinking about, I could have bought a vehicle if I would have pulled my money out last month or whatever. But the thing is, you guys look long term. When in doubt, zoom out, count your account balances every year, and if you're doing things right, you should see that moving up and to the right. But the daily swings are a challenge, and I know that's something, Anthony, you and I talk about a lot. That's another good point, is have a trading buddy and talk to each other, because it's a lot easier when you're not the only one going through. You look online, Anthony, everyone bought Core Scientific at 4 cents. Everyone sold the top of the last cycle. I feel like the only one who's ever lost money in the space, but I guess there are others out there. Anyways, moving along, hash rate. I wanted to throw this one in, Anthony. We can get your comments on this. We just have not seen the hash rate drop off as anticipated after halving. It doesn't seem to matter what the hash price is. what the price of Bitcoin is. People are mining, and you got to wonder, like, is this miners using free electricity or stolen electricity? What's going on here? How do these people compete with the largest pubcos in the world?
Yeah, there's been no real let up in the hash rate, global hash rate growth. I mean, seeing they're currently heading towards 700, but it does go in that sort of range, 550 to 700, but it hasn't been reducing. We've seen the global difficulty reach an all-time high of 91 trillion. And, what does that mean for mining companies? It's a problem because it's, mining difficulty increases effectively means your production's getting reduced by that sort of percentage. So if it takes miners quicker to mine a block of Bitcoin, which is produced generally every 10 minutes, if they're doing it in 9 minutes, it means that they're achieving it far quicker than they should be. So every 14 days, we have this difficulty adjustment, which adjusts the network and makes it harder for miners to accomplish the task, and therefore try and get that block back to 10 minutes. And we've seen that difficulty consistently go up throughout the year, all the way basically for the last 20 months now. So it did come back down in December 2022, but since January 23, we've just seen an uphill rise. And the level of that rise has really impacted miners. Miners with half or a third of the hash rate they have at the moment last year were mining far more Bitcoin than they're mining today. So, it might only feel like 2 or 3% every 2 weeks, but believe you me, it starts to add up significantly. And the start of the year, we saw some of the miners, they were mining 60, 70 Bitcoin per exahash. And we saw the highest miner in July was mining 25 Bitcoin per exahash. That's a big difference, and so, it is impacted. Yes, the price is a bit better. So it's 42,000 in January. It's 59,000, 60,000 towards today. So, hash price, the Bitcoin price is up sort of 50%, but they're mining sort of like, just above a third of the Bitcoin production they were doing in January. So it doesn't stack up in terms of the impact to miners. I think there's a hope that obviously these North American miners have the cheapest energy, have the most efficient mining machines because they're the biggest miners in the world. They have the capital to replace mining machines for the latest Bitmain S21 Pro, it's sort of like 13.5 joules a terahash. That will keep the costs down. But I'm not seeing any sort of like real change in the global hash rate, and it's sort of slightly baffling. You'd expect it to have come down because you'd expect some people have had to switch off. So it does baffle me whether there are people out there accessing free power, because inevitably, that's where you're going to have to be, in the next sort of few cycles. It just won't pay to keep paying twice as much every 4 years. You're going to have to be able to access really, really cheap energy, and I mean really cheap, literally free energy.
Well, Patrick Fleury made an interesting point about how TeraWulf was really formed as a power sink for Beowulf. They understood that as a power company, they're going to have ebbs and flows in demand. They needed somewhere to dump excess power. It just happened to be Bitcoin mining at that point in time. I could see this, Anthony, down the road 10 years. Every power plant just has a small container of miners attached to it, and they run excess power in there as needed, basically making it free, right? Now, one question from Blast. Which miner do you think is the best value proposition based on today's prices? Anthony, we'll do a bit of a teaser here. We don't normally give out predictions. Yes, it's not financial advice. I know there's one in my mind right now that I definitely think is a good buy at these prices. So we'll come back to this question. We'll tease you guys a little bit. When we get to the slide, I'll bring it up, but we'll answer that one for you today here. Now, moving along, Anthony, up to 75 people in the stream. So we're doing really well here. You guys, appreciate the support. Hit the like button. It helps get this to other people who might find value in this stream. We're just getting into the good part here where we start taking questions and talking about the company specifically. Now, Anthony, a few things I wanted to call out in the Bitcoin news column here. HODL15 Capital, a great account to follow on X if you don't currently. They track the US ETF flows daily. We saw inflows on the 12th and 13th, so both days this week so far in the neighborhood of 30 and 40 million respectively. but a pretty big drawdown or pull out of money on Friday, 90 million. And then if you look earlier last week, we had multiple days where there was over $100-200 million drawdowns in the ETF. So people actually pulling money out overall for the day. What do you make of that, Anthony? Do you think there's some uncertainty, just general positioning, or what's making those big pull downs?
No, I mean, I think we can go back to those dates at the beginning of August there, some of the sort of like the global macroeconomics. So we talked about Japan and the increase in value of the yen compared to the dollar, and bear in mind, some brokers have gone out there and borrowed against the yen because it was very zero rates of interest, use that yen to convert into dollars, bought say US stocks which they felt would give them a better return. And then what happens then is the actual yen gets stronger against the dollar, and some of these investors then are having to force to sell their US investments to cover that position. And gotcha. So that there, along with the fact that we've got 2 wars going on at the moment, we've got unease in a number of countries, even some of the more the G7 countries where there's problems at the moment. We've had riots and protests, and political landscape looks to have changed dramatically the last sort of 4 years in this space. So all these things will have an impact. Bitcoin isn't sort of like it's not protected from everything. People who invest in Bitcoin also live in the real world as well. So,
it's not a vacuum, I think is the word you're saying. It doesn't live in a vacuum.
No, it doesn't. And so, those news stories that came out last week, and we saw the markets drop as well, Bitcoin's going to be affected as well by that. If the Nasdaq drops a percentage, Bitcoin's not protected. It will also impact there. Not saying it'll impact to the same level, but there'll be impact there. But equally, you look at, if we saw the table from the start of the year, there was probably less red days in the first 5 months than there are showing on that chart there. So it really was, a buying frenzy. And, some of these companies now, some of these big investment companies like the BlackRock have got more Bitcoin on their balance sheet than MicroStrategy. So, that tells you the levels. MicroStrategy have got over 210,000, and I think a couple of these funds have got more than that now. So, and it won't be long before other funds overtake, because they're constantly buying with investors' money. Investors, put their, $100 a month or $200 a month, etc., into these funds, and that fund is then obliged to buy Bitcoin because they're Bitcoin backed. You can't buy gold. Gold's not going to have the same impact as Bitcoin. So.
So let's talk about
them buying it. Yeah.
Let's talk about that, because we've got 2 other visuals on the screen here that talk about some of that buying pressure. One, we're seeing Goldman Sachs. So they've come out with $500 million worth of Bitcoin. Obviously, one of the most notable, largest banks in the world. We've got Japanese MicroStrategy, they're calling it, Metaplanet, continuing to buy. We've got Marathon that just came out saying they want to raise about 250 million. It was oversubscribed to buy Bitcoin. So we're still seeing a tremendous amount of buying pressure. But interesting point you bring up, Anthony, that yen carry trade, as they're calling it, really having some big impacts on the front end of August. Interesting concept too, you guys. I live in Canada, obviously. You live in the UK, Anthony. A lot of the companies we buy here in the mining sector obviously trade on the NASDAQ in US dollars. So we're going to see some of the impacts of this currency adjustment in real time on these trades as well. Fortunately, I guess for me, the Canadian dollar has been losing strength against the US. So if and when I start to sell these positions, I should get a favorable trade. But it's interesting to look at the currency angle on this as well.
The UK pound's been actually getting strong against the dollar over the last couple of years. I think we go back 2 years ago, we had about 2 or 3 prime ministers nominated in the space of about 2 months. And that didn't do very great for the UK economy, having so much change. And we were literally at one point on parity with the dollar. So a dollar was literally worth a pound. Today, it's closer to, I think, $128.5 to the pound. So that's over 25% strengthening from the pound in the last couple of years. And the UK, the fact, that we've voted to leave the European Union and sort of like manage ourselves. It's not all been doom and gloom. And I mean, I'm not here to discuss politics, but the UK economy hasn't been going as badly as people anticipated, and maybe that's probably why we've been stronger against the dollar and some other of the big currencies as well. So yeah, I'm at a point now where I'm seeing like losses on exchange rates.
I'm going the other way. There was actually a point in time, interestingly enough, I think it was right around the subprime real estate crash, where the Canadian dollar was stronger than the US dollar. I remember people going down there and buying rental homes and properties in Phoenix, actually benefiting from the currency exchange. But I'm sorry to hear your luck over there, Anthony. It's sorry to your economy's working so well. I wish I could say the same. Now, the other thing I wanted to get your take on the bull run, we've talked a lot about the timing, the cyclicality of Bitcoin, these 4-year cycles. And this chart from Sensei compares this 800-day pattern, I guess, they've seen from peak to trough between these cycles. Interestingly enough, we're really entering that 800-day kind of period right now. Anthony, you've a lot of times said kind of the fall is going to start to be where we may see some action here. Many of the mining CEOs have mentioned on our channel they expect kind of the September to January range to be very, exciting in the Bitcoin space. Do you think history will repeat itself and we're going to see this rally moving into Christmas?
You'd like to think so. I mean, a lot of these, technical analysis is from charts and following. I don't see anything negative against it. In fact, I only see positive because of the ETFs. We didn't have the ETFs before, so the buying of Bitcoin has accelerated. But yeah, we're hopeful that this is the sort of period now that the bull run should be starting, and so it will be interesting to see if we can get some of these targets by the end of the year. I think 100,000 has been quoted as a number to be achieved before the end of 2024. That would be good as a sort of a base marker. But we want to see a bigger run, up 150 up to 200,000 a coin. To make that conversation in Bitcoin mining become more relevant again, because at the moment, at the price we're at the moment, it's not being talked about as much, and maybe it's people have moved away from Bitcoin for the moment until they see some better performance.
Sure.
And bear in mind, we've hit these highs this year already. We've hit the highs in 2021, so we haven't really gone significantly above the 2021 highs yet, which reached 69,000. We've had 74,000, but bear in mind, you're talking about 2 years, just over 2 years since that high in 2021. You'd expect it to have done better in this period. So let's see, the rest of this year, if this chart looks as accurate, and I'm sure we're doing regular updates on it.
Yeah, I personally think we will be in for a repeat here, but again, time will tell. If you look at the long-term chart, the 5-year on Bitcoin, it really does look like a similar setup, just on a larger scale. 2 more quick slides here, you guys. This is the current interview schedule. As mentioned, we moved our Hive interview from today until Monday. I just saw a question from you, Rohit, on Hive. We will talk about them. We can actually cover them first for you here. We've got a slide talking about their earnings. We're going to have them on Monday for a follow-up. We've also got Hut 8 on Monday. Tomorrow, we've got Bitdeer. Friday, we've got Soluna, which had a huge day this week, and Core Scientific, which is going to be a really good discussion. Cypher on for their inaugural channel visit here on the 20th, Tuesday. Then we have Rosso, which is a specialist in immersion technology. So if you guys have any questions about immersion, the benefits on mining, how it impacts the lifespan of the miners, cost, economics, anything like that, that's going to be a dedicated educational piece. We've got Dennis Porter from Satoshi Action Fund on Monday, the 27th. This is one of the biggest names in the Bitcoin space. SATO Technologies, our good friend Romain on the 29th, and then Sheldon and Steve Eliscu from DMG on the 3rd. I was actually just in Christina Lake this last weekend, checking in on the boys there, Anthony. No, I'm just kidding. I was out there doing some boating. Hey, this slide, I'll pass it over to you. Quick update on difficulty block time here.
Yeah, so this is the difficulty adjustment, which will take place today, effectively. So it was at 91 trillion for the last 2 weeks, and at the moment now we're seeing that the block time has been taken an average 10 minutes 43. That's longer than 10 minutes, so therefore it looks like we'll see a reduction in difficulty, which will be a relief for the miners, because that gives them a little bit more. But bear in mind, we are still not quite at the difficulty change, so it looks like it's going to occur in the next sort of 40 blocks time, so next sort of 7-8 hours, and it does sort of that the percentage does get quite moves quite significantly in the last sort of hour or two, as changes occur. So it could be 4.15% now. I mean, it was like 3.5% yesterday, so it's got a bit large today. It'd be interesting to see what it was on our next podcast. We'll sort of review where it actually moved to, so to see how close that is from the true figure. But yeah, all indicators at the moment suggest it's going to drop by over 4%.
Yeah, and what's interesting there, when you talk about get more difficult or reduce difficulty, my understanding of this, Anthony, correct me if I'm wrong, is they actually adjust the rounding on the solution number that the miners are looking for. So these miners are all competing to find this sequence of numbers or this code, and they'll actually truncate the amount of digits or decimal places needed to solve that equation. Is that your understanding as well?
Yeah, it's effectively one number everyone's looking for, and they'll make that number a little bit easier, a little bit harder, depends how the difficulty moves. So like I say, this last 14 days, it's took longer than 10 minutes. So we'll see. At the moment, we're looking at a positive adjustment coming down. At the moment, it's suggesting about 4%. So we'll see if that's close to the figure. But yeah, it'll make it a little bit easier for miners to find the number. And at the same time, they'll get a bit more Bitcoin than they did in the previous period.
Yeah, we could use that. Hey, now first slide here. We're heading into the miner segment. We'll bring up Hive. We had a question from Rohit talking about positive earnings. Any thought on their stock price? I know we've talked about Hive quite extensively on the channel, Anthony, as really an undervalued Canadian player in the space. They were one of the first on the scene, one of the most popular companies last bull run. Share price has been beaten up considerably. They're now offering, in terms of valuation to exahash, one of the best value propositions in the sector. So I'll let you take it from there, maybe discuss some of their earnings. But this one, from my perspective, definitely looks attractive.
Yeah, I mean, I did an article a few months ago, basically explaining, the question was, is Hive undervalued? And the article goes in then to look at valuations of the mining companies, looks at their productivity, looks at the balance sheet strength, looks at the market capitalization, the enterprise value, the number of hash rate they have at the moment, hash rate in the future. And when you look at a number of those metrics, Hive did look significantly undervalued compared to a lot of the big peer miners. So it's certainly the market doesn't give it a lot of credibility for all the things it's doing at the moment. Bear in mind, it's a self miner, but it also has a HPC business, and the HPC business it's starting to grow more and more now. We've seen the fact that that they're growing their they're growing the revenue stream month by month. Started off quite small, but at the moment it's probably around about $1 million per month in annualized revenue. So not to the level that Bit Digital are actually receiving, or Core we've anticipated receiving there, but for Hive it's about growing organically. So they really look at the position they look at is they look at their cost structure. So they don't pay the top wages or bonuses that some of the other miners have been seem to be doing this last few years. They try and keep everything within reason. They don't they do use the ATM as and when required, but they're not hitting the ATM as hard as other miners. So they're trying to use profit to grow it organically as well. And they productivity wise, I mean, there's them and Bitfarms, and then it's the rest of the pack, because those two month by month for the last 3 years have been the top two performing miners. So everything's positive. They did actually come out. They came out with a net income position. however, come out with a net income position. However, one thing I'll say is the way they calculate their net income. They're obviously using IFRS, so they don't show the revaluation of the digital currencies. So when the Bitcoin price goes down, and we saw it go down between March the 31st and June the 30th. So March 31st, Bitcoin price was around about $71,000. June the 30th, it was around about $62,000. So that difference of $9,000 should be applied to the Bitcoin that you held within that 3-month period. And so Hive on their income statement aren't showing it in the top half of their accounts like most of the other miners have had to do and had big losses. So, Hive actually made a net income of $3 million. But if you include the revaluation, the loss on revaluation, then it's actually a 19 million loss. So, just food for thought there, because if they were to sell that Bitcoin, then they'd have a loss going through their books relevant to that loss there. So basically, they do an extra line below their position just to show that the position of their digital currency as well, and what the impact of that would be. So they've got a 20.7 million unrealized loss on their Bitcoin on the balance sheet that they don't include in their formal IFRS accounts. So that's something worth mentioning. It's not giving the, effectively like the true position. And we had this yesterday from Patrick. Ben Gagnon, when we talked with Bitfarms. So Bitfarms is another mining company that also use the IFRS instead of GAAP. So GAAP accounting, now the rules have changed. You actually show your Bitcoin valued as at the value at the end of the period. So a lot of these big miners with big hodls had big losses, and it's a loss in terms of unrealized. It's not a physical loss until you sell the Bitcoin, but the fact that you're saying it's like you're looking at your share portfolio.
I was going to say, it's like the losses in my account right now.
Yeah, exactly. Your share portfolio is down today, but you've not lost anything until you've sold it. If it goes up 50% tomorrow and you sell it tomorrow, you've made a gain. So,
but it is interesting, Anthony, to break out the two different accounting principles, because to the untrained eye like myself, if you look at, say, Hive's earnings versus, I don't know, CleanSpark's or whatever, they're very different numbers, right? And unless you understand these accounting intricacies, people may just not get it.
They are, and this is why you'll always hear me say I always look at these revenue, income and revenue papers, and look at the cash costs involved. So for a company to operate, it's about having sufficient cash to cover the bills. So what you're bringing in, your revenue from your mining. With that revenue from your mining, can you pay the energy cost? Can you pay your salaries? Can you pay the overheads applied? So think like your building costs, your insurances, professional fees, your cash bonuses. We know that depreciation and stock compensation are relevant costs. Of course they are, but from a cash point provision, they're not cash costs. So depreciation, it's a carrying cost, and it's not going to affect the bank position of the business. But basically, you're showing that your assets are no longer valued at the value they were when they were purchased.
Sure.
It's a bit like buying a motor car, and it goes up off the forecourt of the car. And you lose 20% on the day you drive off the forecourt. So, that's effectively depreciation of 20%. So, these companies are showing depreciation as a cost, but it's not a cash cost. You haven't physically lost 20% that day.
That's why they say cash is king, Anthony.
Cash is king. Statement. Yeah, and so when you do a cash comparison of all the miners, it doesn't matter if they're doing GAAP, if they're doing IFRS, or they're doing some other mythical accounting practice. Cash costs are there to be seen, and they also produce things like a cash flow statement, which tells you, how much cash from their business activities were incurred. So if you look at the cash flow statement, it's quite intensive. Just look at the top section, which says, cash from cash paid out from the business operations, and that will tell you sort of like the business costs in cash. straight away. So it's always quite a quick indicator to see what the business is spending over that particular period. You can then compare that to the revenues, and you'll get very close to a margin based on cash. Now, there's a few caveats to that. Some of them have like we spoke to Patrick last night, so it wouldn't work with TeraWulf because they operate a JV, and GAAP rules don't allow them to include the JV in their accounts because it's not over 50% owned by them. So where you have a JV where you're more than 50%, you can include the relevant revenues and costs from that position. When you have under 50%, you have to just use like a carrying figure across there, and it doesn't always tell you the whole pitch. That's why a lot of these mining companies will also use things called the adjusted EBITDA. And the adjusted EBITDA allows them to sort of like take away some of these one-off costs that will never happen again and show it effectively. The adjusted EBITDA is very close to the cash position for each of the miners as well. So they'll do that. However, there is, again, each miner will interpret that adjusted EBITDA because it's not a recognized financial position to show. They'll use a lot of their own interpretation. So what you might need to be careful of is when you look at adjusted EBITDA, there might be 31 different versions of adjusted EBITDA with the 31 miners. So it's food for thought. But generally, you can get the go through these accounts and pull out the cash costs fairly quickly, and then do some sort of comparisons that way. And that just gives you effectively, that's just what, again, it's one metric. You've got to do far more work to get to a position.
No, it's good insight, and I didn't realize the joint venture restrictions there, Anthony, with the greater or less than 50% interest in the JV. Now, we had a comment from Matt Myers about IREN selling covered calls until IREN recovers. You mentioned in the intro, Anthony, that IREN, along with many of the miners, have taken quite a haircut here over the last couple of weeks. The number that really stood out with IREN, obviously, was the energy cost. And we talk about numbers. You're just talking about how to read these financial statements. The energy cost for IREN didn't look great for July, and it doesn't sound like it's going to look much better moving forward here for the next month or two, hey?
No. So if we go back a year ago, so IREN don't have PPA agreement. What they'll do is they'll do maybe short-term hedges on price. So they try and guarantee a price over a short period, maybe 1 to 3 months, something like that. So in 2023, when there was a real requirement for energy in those hot months of the year and the price of energy skyrocketed, if you've got agreements at certain prices, you can make some real money by selling money back to the grid when the price rises and earning money. And effectively, I think it was in some of the months last year, maybe July or August last year, IREN didn't pay for energy at the Childress site at all because they received more backing credits than they were actually charged in energy. So it worked really well. Go forward a year, and they've basically put in a PPA agreement. Now, from my understanding is the market rate in Texas is around about 3.5, 4 cents a kilowatt hour, and they've got a PPA agreement far in excess of that, on the belief that it was going to the price was going to spike, and then they'd be in a position then when they could sell energy back to the grid and make a sort of like what happened was no volatility in energy in July, and effectively they're paying that price then to mine, and they have to pay it. They have to mine Bitcoin. You can't say, well, you know what, I'm not going to mine at all. You've committed to effectively using and paying that price. So if you can sell it on like they've done before and be credited back that way in power sales, that's one way. But no one's going to buy the power when the power price wasn't spiking. So they were stuck with a price that was significantly higher. And I think their price to mine a Bitcoin in energy terms was actually higher than the revenue in July, slightly higher by about $300. So if you look at, I think it was 66,000. If you go to say compare that with TeraWulf, who we know have got a very cheap rate of energy, they were mining Bitcoin at about 36,000. So that's a $30,000 per Bitcoin. And if you think how many Bitcoin IREN mined in July, I think it was 222. So 222 times 30,000, that's probably 6-7 million. Probably more than maybe anticipated. And if that happens in August as well, and it's all about the weather. I mean, if the weather increase, if it gets hotter. We were there in June and we felt it was hot in June. So, but apparently when we were there, if you remember rightly, Bryce, people were saying it's not as hot as normal. And we were like sweltering, weren't we, in the Denton facility.
We almost had to take a swim in the Riot drainage pool there, Anthony. You and I were not doing too well out on that tour.
We were down to our trunks before Jason went, no, stop!
Yeah, we were going to go investigate the water quality for ourselves. But no, you're right. And look at your memory, Anthony. Your 222 Bitcoin for IREN is exactly correct. And I did see, because I don't think you were even looking at the slide. I think you just remembered that.
I was trying to think in my head about what they did.
Yeah, I saw. And Dan did put out a tweet. I think he said,
yeah, no, Dan's been open and transparent. He's explained
5 million
what
or
they've
6
done.
million is a lot of money. So I think your calculation there is pretty spot on. So we'll see. My only question there was, like, I just don't understand how they could have been that far off. But I guess
it's a hedge. It's I mean, in all sense and purposes, it's a gamble, and the gamble didn't pay off this time. It paid off last year. And they made some real sales last year, and what you got to remember is, we can't compare this to Riot. Riot have got a PPA agreement that's been in place for about 5 or 6 years. It's only 3.9 cents a kilowatt hour, their PPA. No miner can get a PPA of 3.9. It would appear that IREN probably got a PPA maybe 2 or 3 times bigger than that price that Riot have got. But they did it on a short-term basis, thinking if the price goes to, $5,000 a kilowatt hour, they're in the money, and it just didn't. It just hasn't. The demand wasn't there.
Gotcha.
And so in July it hasn't worked. I'm not following the weather in August. I'll be honest with you. I keep my eye on a lot of information, but I'm not following weather patterns around the Childress site in August. So, that'll be interesting once the update comes out. But one thing you have to say about IREN is they are transparent, upfront. The cost of mining is always in their update. I think they were the first miner to actually put the price, how much it costed energy to mine a Bitcoin, and they've been doing that for a long, long time. And shareholders like to see that. They probably didn't like the July figure, because when you compare that to the June and May figure, it's a big jump. It's a big jump, and it was stood out. And I think when I put my update on, it was all the questions that came back were really about that price of mining the Bitcoin.
People thought it was a typo, Anthony, for the first.
Yeah, and it caught my eye straight away, and I did a little bit more research into it. Yeah.
No, it's good, and like you say, the transparency is what matters. Whether it's good or bad, you got to let people know. So, hey, moving along here, Anthony. I know you just put out your article for Compass, your monthly article, comparing July production results. So we wanted to go through the tables here, talk about some of the standouts, specifically some of the smaller miners here, Anthony. There's a few metrics where, despite the size, it seems like some of the smaller miners really do have the upper hand here. So we can kind of start off with the overall table, or point me in the right direction here, Anthony, in terms of which ones you'd like to talk about. But very interesting to see the spread here, to say the least, between some of the metrics.
Yeah, I mean, when you look at, if you look at I always use the Bitcoin production by exahash, which is a level playing field for all miners. It doesn't matter if you've got 30 exahash or half an exahash. It takes the amount of Bitcoin you've done and converts it into what it would be if you just had 1 exahash. And if we use that line there, you can see, actually, I mean, we talk about this company about once every sort of 7 or 8 months, I think a decent update. And actually it was Marathon Digital in July who had the highest rate of Bitcoin per exahash. And remember, last time we spoke about that was December. So in December, they sort of blew the rest of the charts away in terms of their mining. So, that was a good update. And then we said, hang on, let's wait until January. And January's results came in, and it was just a different month altogether for them. They dropped about 800 Bitcoin in 1 month. So we're looking at July's here. They mined 692. So bear in mind, with the same hash rate, they mined, or less hash rate, they mined 1,854 Bitcoin in December. So you're looking at, I said to you before, if you look at about just over a third, that's exactly what Marathon had done. And Marathon were the best performing miner in terms of that metric for July. So just over a third of their December total. Let that just sink in a little bit, because the Bitcoin price hasn't increased by that difference. So what it means is this global hash rate difficulty and Bitcoin price aren't as correlated as people think, and miners aren't achieving. It might sound like they're getting good revenues, but they're not getting as good revenues as they were in towards the end of last year.
Well, and I'll bring it up, Anthony, but I'm pretty sure the Bitcoin price was as high, if not, yeah.
It was 42,000. We know it was 42,000 in January, Bryce. I've already, I know what the price was on the 1st of January. So when they brought out, 854 Bitcoin at 42,000.
Yeah.
And then look at what 692 Bitcoin, and the price of Bitcoin on the last day of July was 64,000.
Oh, you're doing mining revenues are a third, or are you doing production as a third?
So what I'm saying is, production is just over a third, and the difference in price is a 50% increase. So it's,
and just so I'm thinking about this correctly, we would need the price to effectively triple to offset a third reduction.
Not quite triple. What you'd want is so for Marathon to get the same revenues as December, they should have mined effectively probably about 1,200 Bitcoin.
Gotcha. Okay. Yeah, because the
price has gone up 50%. So, if they mine Bitcoin at 1,200 Bitcoin and the price has gone up 50%, you can add 50% to 1,200, you get 1,800 Bitcoin. That's sort of a very simplistic way of doing it.
Gotcha.
Yeah. So that's the best performing miners. So just think other miners will not have done as well as that. So.
Yeah, no kidding. Now, aside from Marathon on this one, Anthony, any other standouts here?
Yeah, so I always look at we talk about the Hives and the Bitfarms, and Hive was second in terms of production. Bitfarms were sort of like equal third with the likes of IREN, Digital, Gryphon. So Gryphon, one of the smaller miners actually, and Gryphon does quite well every month. There are sort of like in that top 6 or 7 miners, at the moment there. 1, 2, 3, 4, 5, 6. Yeah, they're 7th at the moment this year out of the 15 that I cover. So they're in the top half. But Bitfarms and Hive, SATO a third from the year, and IREN a fourth. And to be honest with you, that's the same top four position from the whole of 2023. So you look at this from a consistency point of view there. So again, looking at you look at the slightly other end, and actually interesting to see CleanSpark there. So CleanSpark not mining as much Bitcoin per exahash as some of their peer miners. CORZ also, but with CORZ, what we've seen CORZ now start to change some of their sites from Bitcoin mining sites to actual HPC sites in readiness for the CoreWeave deal. So they're sort of like, their numbers are going to be fluctuating as they go through. They are quite a consistent miner, to be honest with you. And
but that was actually my question to Adam when we were down there: is as they start that conversion, how big of impact will it have to your daily operations?
It's going to have a massive impact, but because they're building sites, putting miners into those sites, and then converting the sites where they remove the miners from. So it'll only be the periods where they're physically the days that they're moving the miner from one facility to another facility. There might be a few days gap, and so that will account for some of that change there. Also, one thing about CORZ is they just put in one hash rate, so they don't turn around and say, we've got 20 our hash rate is 20, but you know what, because we could tell throughout the month we only use 19. Now most of these other miners will tell you they only used X amount of hash rate. So Hive, Bitfarms, SATO, IREN all have an operating hash rate. In fact, there's very few that don't. I'm trying to think now. CORZ don't. CleanSpark don't. Soluna don't. I think they're the only three or four that don't. And so actually, if you look at it, their numbers are towards the bottom there. Maybe if they introduced an operational hash rate, you'd have these tables pretty much all very similar. And if you look at sort of like the top 10 there, the gap between 1 and 10 is very small, a few percent in terms.
It's definitely getting tighter. And I know you brought that up on the call. Hey, now I want to get to a couple more slides here. So Gary's in the house now, our #1 Core Scientific fan. Gary, lucky for you, we have not talked about Core Scientific yet, so we're going to come on to them. We've got an interesting storyline out of Marathon. We've got an interesting jet storyline out of CleanSpark here, Anthony, that I want to get on to. So a number of key news articles to come up. You guys put your questions in the chat. I just wanted to get through a couple more of these charts, Anthony, specifically Bitcoin sold. We're starting to see, again, probably even more dramatic divide. We used to have people who were either selling, hodling, or somewhere in the middle. Now we've got a few miners like DMG and SATO, for example, that are actually essentially doubling their sales versus what they're bringing in. We also have HUT that was slightly over 103%. Again, this is the biggest question mark in my mind in this entire sector. I just do not understand how, out of all these companies, there is not one clear understanding of hodl, do not hodl. It would be like if gold companies, some of them were holding all of their gold and not selling any, and some are continuing to sell. What's your take on this, Anthony?
So you're right. There's a polarized view. You've got about 5 or 6 miners who just sell every day. So that's quite obvious that, you know, the likes of Corp, Bitdeer, IREN, Soluna, TeraWulf, and to a certain extent, HUT now are selling their production each month. And sometimes HUT might be slightly above production, slightly below production. They tend to keep that 9,100 Bitcoin on the balance sheet. That number's been there for quite a few months now. So that's there ready for when they do need to use it. If you look at DMG and SATO, they're two of the smallest miners, so their market caps are, you know, significantly lower than the rest of most of the rest of the table. And for them, selling more Bitcoin will be a couple of reasons. For SATO, they had a bit of a problem at their facility in June. They had a bit of a fire which affected about 10% of the facility. So they've had to sort of like refurbish that area, buy some new miners to replace the old ones, and they're doing that now to get their hash rate back to where it is. So for doing that and getting things back on track, they've probably have to sell a bit more Bitcoin than they would normally do. For DMG, similar reason, except they didn't have any problems at their facility. They just got out and bought quite a large, in terms of their current hash rate, which is about 1 exahash. They've gone out and bought 4,500 T21 miners, and that will get their hash rate closer to 1.7 exahash, hopefully by this next update. So I think we were expecting it in July, but in their July update, they've announced it's hopefully going to be in August. So they had a few issues with deliveries. But,
and Anthony, I just want to pause there because DMG is a smaller company. We don't get a lot of news updates, but they're increasing their hash rate, you guys, approximately 70%. Up to 1.7 exahash, hopefully, like you say, this month, Anthony. That's significant. That's similar to Riots or Marathons or CleanSparks adding dozens of exahash in a single month in terms of a percentage basis increase.
It's a big rise, but in fairness, they haven't raised the hash rate for quite a period now. So they've had that 1 exahash for quite a while. So this is a big move for them. And as I say, the T21 fleet due in anticipated in August. They sold 42 Bitcoin, which is the 191% of their production, but they've still got 444 Bitcoin in their treasury, and that's got a valuation of about 29 million. So if you look at DMG's valuation, I mean, it can't be much more than 50 million. They've got 29 million of Bitcoin sat in the treasury. So if you're going out there and buying DMG for 50 million, you're effectively paying closer to 21 million because they've got that cash in the treasury. They've also did something a bit more unique with regards to one of their contractors. They've actually paid him in terms of stock options rather than in cash. And so they issued 100,000 stock options. They were priced at about 52 cents a share, and they've got 3 years. And they'll be vested in 4 installments over the next 12 months. So that was an interesting update as well from them. So, again, they've got no debt on the balance sheet, DMG. They are a smaller mine. I mean, Sheldon Bennett, the CEO, is probably he's probably got the most experience of any of the miner CEOs in the Bitcoin mining space. In terms of Bitcoin mining, he's been in this space for over 10 years, started with Bitfury, built DMG from the ground up,
He set up Marapool too, right?
He set up Marapool. He set up TerraPool. He was part of the project that built the Bitdeer facility at Rockdale. They created software which they've they've sold to other users which tells you the performance of mining machines in a facility. So when you can see the optimum performance for each of your minings by machine. So really useful if machines are operating optimally. You can go in there and make necessary changes. They've had that for a number of years, and other miners have maybe used that or developed their own since that. But DMG were at the forefront of that there. They've built containers for other mining companies.
Yeah, they know what they're doing.
Sean's a bit of a jack of all trades, and he's very much again. He'll have a considerable ownership of DMG, and he's doing things very much organically, not going out there and chasing debt or diluting significantly to grow. They haven't diluted for quite a while. I'll be interested to see their update, see what they have done. They may have had to dilute a little bit to get some of these new 4,552 21s, and that will generate about 0.86 of an exahash. If you look at what their operational hash rate was for the month of July, it was about 0.9. So add those two numbers together, you're getting to 1.7, 1.8 exahash. And I think they've got a target to try and get to 2 exahash by the end of the year. But that's probably the reason they sold more Bitcoin than everybody else in terms of percentage wise.
Yeah, it certainly could be. Now, we got a great question from Joy here, or more of a comment, I guess, talking about Bitcoin needing to be on balance sheet for a miner in terms of a red flag investment. I want to talk about Marathon next in terms of their big private or purchase here announcement, Anthony. You can see that's now, going to propel them well over 21,000 Bitcoin. We've got Riot that's just about at 10,000. Hut, despite selling all their production and then some, still over 9,100. And CleanSpark, another interesting storyline here, Anthony, with CleanSpark we'll come on to in a second, but over 7,000 Bitcoin. Do you have any concerns if companies don't hold Bitcoin? Does that play into your investment decision at all?
No. If I look at my 4 biggest holdings, 2 are on there and 2 are not on there. So I've got mining companies that don't have any Bitcoin because they do everything well. And there's a very much, we've said before, polarized view as to those miners that are holding Bitcoin and they believe in the price of Bitcoin. They can see nothing but going up. And then you've got the other miners who sell on a daily basis to pay operational, pay capital costs, reduce the amount of dilution that they're having. I mean, some of the miners are using ATMs to effectively pay their operational costs as well as their capital costs as well now. So, and that dilution might be impacting their share price because, if you're selling shares on a regular basis and the market picks up on that there, then, it's going to suppress the share price a little bit. And that could be a reason for some of these mining stocks coming down. I mean, a lot of, there's not many miners not using ATMs at the moment. Even maybe some of the smaller miners, it's more challenging for them too because of the sheer size that they'd have to do to make it an impact on their current position.
And but, Anthony, I would just jump in there. I would say the smaller miners, it's not because they maybe don't want to use an ATM. It's because it's not effective.
No, it's challenging. Yeah.
Yeah.
But, look at, Marathon have used ATMs the last 3 years to get to where they are. Riot also, not necessarily Hut, but CleanSpark certainly in the last sort of 2 years have, sold a company a number of times. But then you've got to think, they went from 600 million value in October to, they were over 4 billion back in March. Now they're probably just over 2 billion at today's price. But that's still, over 3 times the value of what they were in October. So how, if you're selling the company once and your value increases by 3x, then you've gained from that ATM and delivered better value for shareholders. That's probably the way to look at it.
Yeah, I just pulled up the market cap slide here as you're talking through that, Anthony. You can see Marathon, which we'll talk about next.
Yeah, it's looking more where it should be now. I mean, if you think about the big miners, you obviously Marathon with the biggest hash rate, and then you've got CleanSpark and Riot. But now you see Core Scientific have moved into place number 4 now. And bear in mind, Core Scientific's market cap, even at the start of the year, was probably about 300 million, 400 million. So we've seen their market cap increase this year absolutely significantly with the amount of interest and the amount of good news stories they've had there. And this news story yesterday about today about the note for 400 million to get rid of all that more expensive debt on the balance sheet, that would be more positive as well going forward. And just so you're aware, the subscription for that debt, for that note, was 4 times oversubscribed. So
here, I'll just bring that up, Anthony. We can actually talk about the Core Scientific offering right now. Check that one off the list.
Absolutely. So 400% or 4 times. If you've got 400, there's enough there that they could have gone to 1.6 billion effectively.
So again, for a non-accountant, Anthony, that basically means, hey, they're going to the market. They're saying we're wanting to raise money at this certain interest percent, and they had 4 times the amount of money that was offered as requested. Is that right?
Yeah, there was bids coming in, and those bids totaled 4 times what they're able to offer. So initially, earlier this week or last week, they had it at 350 million. They've increased it to 400 million, and I think they can do an extra. I think it's like an extra 60 million within the first 13 days, so they can increase it. The rate of interest for that there, and this note will run until 2029, so probably 5 years, at 3% interest rate. Now, if you think about the debt they're going to be replacing, that debt at the moment, they're paying just over 11% for that debt. So think of even the interest saved of just over 8% on over about 300 million of current debt that they've got there. So that's quite significant. That could be, if you look at 8% of 300 million, that's 24 million a year saved in interest payments by what they've done here today. That's 2 million a month in saved interest payments. That's another positive news story because they were doing quite well before they actually announced this. Now, what they had in mind, and they had a plan to get rid of that debt. They had the actual warrants, and if you think about it, the CORZ W warrants can be exercised now. They're going to cost $6.93, and you get a share price that's worth, I don't know what it is, circa $9 today. So you make a nice profit on that there. But people haven't been exercising those warrants probably as quickly as Core Scientific were hoping for, and so, with all the positive news stories that have gone out there with regards to the HPC, predictable revenues, predictable profit margins, they're able to go to the market and say, look, we've got something really tangible that we can, we have support against here, and we'd like to, go to the market and offer these notes out at this rate here, and people, and it was only open to institutional, private and institutional buyers. So I'm afraid me and you, Bryce, wouldn't have been eligible to go for this, but
not quite. Hey, but I will tell you, Anthony. Oh, sorry, just finish. What was that?
Just going to finish that. So another thing that this does is once they pay that old debt off there, it releases all those caveats from Chapter 11 that are placed on Core Scientific coming out. So when you come out of Chapter 11, all the shackles haven't been removed. You're still having to operate within certain guidelines because you still have some debt on the balance sheet. Until that debt is rectified, then they were having to sell Bitcoin within 10 days of mining it. We raised that before there. There'll be a number of other reasons, things that they couldn't do with having debt on the balance sheet. Now they're going to repay all that debt, and they'll be able to do it really quickly because this is going to happen on the 19th of August. And so today being the 14th, you're looking at Monday. And then just like they did with the previous notes there, they got changed into shares on the day they were exercised. These notes will be issued next week. The old debt will be repaid. The shackles come off. Core Scientific can effectively run as its own company and do its own things and start looking at acquisitions, start looking at other growth things that they were unable to do while they had this, these caveats against them. So it's really, really interesting that people are aware of that. I think this is probably, the start of something to go. And as we come on to talk about, mining companies that people should be paying more attention to, maybe this is one of those ones that people, if they're not already, and it would be surprising they're not already, should be paying attention from now on.
See, that's why I'm trying to interrupt you, Anthony. Now you took my comments there. That's what I was going to say, you guys, in response to Khaled and the earlier question about your favorite miners. To me, Anthony, you and I have done the rough napkin math just on that CoreWeave deal, you guys, just based on the profit margins they're going to make. I think this is a $20 stock all day long. Again, not financial advice. This is one that I'm continuing to buy. And that does not even consider their Bitcoin mining business, which, to your point, Anthony, I think watching Adam Sullivan perform this year with those quote unquote handcuffs of Chapter 11 still on, what he was able to do this year, now that this guy's handcuffs are off and he's got free reign to hodl and to do whatever they need to do to grow this business. I think Core Scientific's definitely one of my top picks right now.
Yeah, and that's even if you just ignore the Bitcoin mining sector, which
altogether.
We're looking at a Bitcoin miner with over 20 exahash in self mining, another 5 or 6 exahash in hosted mining, profitable on both of those businesses, and a hash rate that is bigger than Riot, more energized than Riot, and close to what CleanSpark is. And then they've got this other business that is just absolutely a behemoth of a business, just massive. I mean, they're not even going to be looking at Bitcoin mining prices until they get to 150, 200,000 before the eyes start going over to that business side of it. It's just one of those good news stories. And everything they brought out this year has just been like, has just been additional icing on the cake.
Well, and you talk about the snowball effect. This news story on the screen is a great example. Their improving financial situation opens up new doors and new opportunities, like refinancing this debt that weren't really available a while ago. So this is one that I think is just really getting started, eh?
And Bryce, you say $20 a share. This is what Wall Street are saying as well. So if you look at some of the analyst updates, then they put out regular share price updates on these. I've seen the $20 share price for Core Scientific in recent weeks from the analysts coming out there. These are the, we like to say real analysts, and Jason Les will turn around and say, well, Anthony, you're part of that group now as well. But these are the people that do this on a day-to-day basis.
Well, you sure are. But no, like I say, the numbers don't lie, right? And unless something goes dramatically wrong with this CoreWeave deal, which I don't see. And Anthony, you talk about income stability and predictability. This is a 12-year contract, you guys. This is going to span through multiple bull and bear run cycles, likely 3 of the halving cycles, I guess, to be exact. So originally I was thinking, hey, are you sure you want to lock up all your megawatts? What's Bitcoin going to be at in 12 years? But now I'm taking a second look here and saying, hey, if you can still maintain that Bitcoin mining business, which is, again, one of the best in the industry, and you've got this consistent revenue, yeah, Bitcoin price is probably going to be higher, but what's it going to be in those bear market cycles as well? So I don't know if you have any more comments here, Anthony, but Core Scientific, it's hard to find a flaw with these guys right now.
Yeah.
Moving along, Marathon. They've also been raising some money and making some big moves, Anthony. I wanted to get your thoughts here. So they are essentially adopting a MicroStrategy or Michael Saylor approach. I know Michael Saylor and Fred Thiel have been tweeting and messaging quite a bit on X. I've been following those conversations. Marathon's coming out also oversubscribed. So you just explained what that means to us. This was 250 million, and they're saying basically the majority of this is going to go towards Bitcoin purchase. So wanted to get your thoughts here, Anthony. Do you think this is a viable business strategy, and are they going to see the multiples that MicroStrategy does?
I don't think so. They're not MicroStrategy in terms of what MicroStrategy, they're not a Bitcoin miner. They've gone out there and purchased Bitcoin on the market and raised they raised capital at effectively zero. This is even this is here is at 2.2 125% for these notes here. So that's an interest rate there, which is higher than what MicroStrategy have been doing. So they were able to borrow a lot of it at zero and buy Bitcoin. Marathon are looking to do this now. My issue with Marathon at the moment is they're not even mining Bitcoin at a profit, and now they're going out and buying it. So, I'd be focusing on getting your in-house mining business sorted out, get your facilities purchased, get access to the cheap energy. You've already started to buy more efficient mining machines, so you've got them on order. You can, to get to the 50 exahash, get that side of the business done. Grow your Bitcoin organically. Use the Bitcoin that you need to pay operating costs. Don't use the ATM as a cash machine every day as if you need it to. I mean, there's, the shareholders want to see they want to see shareholder value, and where they're seeing shareholder value in Marathon at the moment, people constantly saying to me, when's Marathon going to get back to $80? I'll tell you when. Never. It'll never get back to $80. Bitcoin price would have to rally hundreds of thousands, and Marathon will have to stop diluting for it to ever get back to that stage again. They've diluted the company 3 or 4 times since the price was at $80. So the price of Bitcoin, and it reached $80 a share when the Bitcoin price was 69,000 last time. If you've got 3 or 4 times as many shares, what price do you think Bitcoin is going to have to be now to get that sort of level of valuation? Yeah. They should be doing what the likes of TeraWulf and other miners are doing to try and get the right price. You can't just do it on efficiency. Patrick raised this point last night, and I agree with Patrick about your mining, your energy cost to mine Bitcoin. It's not the only factor, and so I raised it back to Patrick and said, "Look, Patrick, energy is one thing. You need to have efficient miners. So, if you don't have both, you're not going to operate, as good as your peers."
So
they've got an efficient fleet. They've got a fairly efficient fleet. I think it's around about the sort of like 24 and a half. They don't update that number as often as other miners do. So, I put 24 and a half in my most recent update because I've got no better number to go from. I would have expected in a presentation, they would have highlighted this, showcased it. This is what our current number is. But bear in mind, they bought tens and hundreds of thousands of S19. And if they've still got those on the books, then your efficiency is not going to be as low as the likes of CleanSpark, who are literally changing every miner to an S21 or better, and the likes of IREN, who are only getting the best miners, and then they're seeing their efficiency drop down there. But Marathon have got a good efficiency, no doubt about it. But most of their mining is still hosted. And so therefore, you're at the behest of the host company. You pay a price for your energy, you pay a hosting fee. And if we go back sort of 6 months ago when they were fully hosted, their fee was around about 6.6 cents a kilowatt hour. Now we know, compare that to TeraWulf, whose overall cost is just under 4 cents. So maybe 3.8 cents, something like that. And you've got Marathon paying nearly, not far off double that amount in energy. It's not going to help you. I mean,
so Anthony, I got to jump in here. We can come back and we'll continue the Marathon discussion. But my devil's advocate question is, if Marathon already has an efficient fleet, they don't have a lot of room to really flex on that side. As you mentioned, they're not mining profitably at this point. Does it make sense to buy Bitcoin instead of mining it at a higher cost?
Time will tell. If Bitcoin price goes to 150,000, then that would be great. But remember miners who bought Bitcoin in 2022 and then sold it at half the price they bought it for.
Let's talk about that a little bit. What did you see in the last cycle? Because this is not a new
move. Bitfarms buy 1,000 Bitcoin at 40,000 and sold it half that price about 6 months later. We saw Argo Blockchain buy a lot of Bitcoin and sell theirs out because they felt the Bitcoin price could only go one way. And, you and me can't tell the price of Bitcoin on Saturday this week, never mind next year, never mind the year after. We sort of rely on other experts to do that for us. and sometimes they get it right, and quite a lot of times they don't get it right. So, you know, if you look at cycles, then there's a belief that the Bitcoin price is going to go rally. And I mean, we're all here to hope it does rally, but nobody can tell with any reason of certainty what it's going to do. You know, Plan B came out with a model in 2020, the stock to flow model, and I think it was then in 2021 he was still hoping for close to 200,000, and he got to 69,000, and he was saying, well, my 200,000 is now 100,000, so he dropped it by half, never even reached 100,000. So, and he was probably the most followed technical analysis in Bitcoin on the whole bloody market about, you know, about this sort of, you know, in this space. And people, you know, I was following Plan B because it looked like everything was going accurately what he said, but you know, it doesn't always work that way. So, as I say, it could be inspirational. Track record of Marathon hasn't been inspirational. They've made a few, you know, had a few bumps in their road or their path to where they are today. You know, remember them buying those miners in advance and then had them in a garage for probably 12 months before they were able to put them into facilities. That didn't really work for them. They don't have all their miners in their own infrastructure, so then they're, you know, they've got the hosting fee, they've got all the control, the lack of controls of those miners. They've started to change that. They started to go now and buy infrastructure, which is a positive thing. With the size of that company, they should be focusing on buying infrastructure close to cheap power and getting things done that way. And that way, they've got a Bitcoin mining business that's sustainable. At the moment, for them, it's not sustainable because they're mining Bitcoin effectively at a price higher than Bitcoin. So that needs to be resolved.
And I want to come on to CleanSpark next because they just made a move that we've also seen in the past that was, I guess, a mark of or a death cross for the company. But before we do, I just wanted to close Mara by saying we're both invested in Marathon, you guys. I really do like this company. I like the pure play miners. I think the economies of scale are working in their favor. I think the Bitcoin hodl is phenomenal. To me, it just feels like Marathon has lost a bit of direction. They came out with this CASPA discussion. They came out with the pivot from asset light to vertically integrated. They then are making some moves towards the MicroStrategy kind of business model. It seems like they're just searching for kind of their role in this market, and they haven't quite found it yet. So as we've talked about, Anthony, when Marathon is on, they're unrivaled. Their December numbers, their July numbers, they just need to focus on the basics here and get back to what made this company so great, which is mining a ton of Bitcoin.
And be consistent month by month. Bring out consistent reports month by month instead of what we're seeing one every 7 or 8 months.
Hey, now CleanSpark, I'll give it to CleanSpark is actually a top 3 hold of mine as well. I like this company a lot. Again, same thesis. They mine a lot of Bitcoin. They actually are very consistent compared to Marathon. They've grown market cap tremendously. I think they've used the ATM very effectively. There have been some things I don't necessarily agree with to do with insider selling. This one is another one, Anthony, that's a little bit of a question mark in terms of are you putting the cart ahead of the horse here? We talk about executive compensation. We now see that CleanSpark is getting into the private jet arena as well. So I'll let you make your comments here.
Yeah, I mean, this was a head scratcher for me. You know, they've entered into the purchase contract for a acquisition of an aircraft at $10.8 million, and so $10.8 million. You know, I mean, for a company that's worth over $2.5 billion, doesn't sound a big deal, but these aircraft cost a lot of money to run throughout the year. So you could probably, you know, look at maybe 20% of that cost as operating costs throughout the year. So that could take you to sort of like, you know, another 2 or 3 million to add on to that as an annual thing. And then you're looking into servicing the aircraft at certain times. So every so many years it'll need a full service where it goes away for, you know, a few months to get fully checked out. And that ramps up into significant amounts of money. And I'm just trying to work out in my own headspace as to, you know, as to why they need this. I mean, they're hardly the most recognizable people in the world. It's not like it's Michael Saylor or you know, one of the Beatles or something like that that's going to get mobbed every time they go into an airport. And they're probably going to be traveling business class anyway. So it's not like they were traveling economy. And so, you know, I don't know why they've done this. And, you know, they'll come out with a with some sort of an argument to say they need to get to locations now. They've got sites in all over that sort of mid US states there, and it just means you can get there quicker. But to be honest with you, you can probably still get there with, you know, public transportation just as quick in terms of flights, and the cost wise, it seems a bit extravagant. Now I'm just wondering, Bryce. I mean, I'm a shareholder, you're a shareholder. I mean, if this is a company owned a plane, does that mean the shareholders get the opportunity to book places? Because if they do, I want first dibs on Las Vegas for next year's conference.
I was going to say, I like the window seat, Anthony. If we can get,
I don't mind if it's an aisle seat on these aircraft like that. You know, plenty of drinks. You know, if Zach and Matt are doing the stewards on the plane, they can do a nice service and all that for shareholders. Then we're all for it.
I will say, our the old company I worked for was a telco. They had, I think, 3 or 4 planes, and I did get an opportunity to go on them a few times. They are pretty slick, Anthony. They do cut down on travel time, especially to the remote destinations. But I do feel the expense and mostly, I guess, the optics of this look a little bit off at this point in time, especially with Bitcoin price where it is and some of the mining metrics we're seeing here, the big write-downs.
Well, it was a loss. It was a lost quarter for CleanSpark, as it was for literally every miner. We've seen Hive make a net gain, but actually, in reality, it's a net loss because the valuation of Bitcoin is not accurate. But for CleanSpark, it was a net loss. And then to highlight, and they had some issues with their update. So I mean, yes, they didn't have as much stock compensation this time as previous quarters, but they had a significant rise in salaries and bonuses. And so when that information becomes public, we'll be able to go back and review some of those periods, because as with all these companies, if you're paying directors and CEOs and chairmen significant salaries, it's all in the public domain. They can't sort of like hide it. Every penny's out there. So how much they get in terms of salary, in terms of bonus, in terms of stock compensation, in terms of Bitcoin. Some of these CEOs and chairmen get Bitcoin as part of their remit, the salary remuneration. So, I would have thought spending $11 million. They've made a deposit of it of 500 million. Maybe they want to just check out what the recourse would be once that update came out. But I think it's excessive. These companies aren't sort of like Amazon and Microsoft and companies of that size at the moment. They're still very junior and very young in this industry. I mean, we keep saying, CleanSpark can't be more than 4 years old in terms of the mining space. Hive are the oldest miner, and they're still not even 7 years old, Hive, and they're the oldest Bitcoin miner in North America. So publicly listed Bitcoin miner, the oldest one, followed by Bitfarms and Hut. So the 3 Canadian miners are the oldest, and then you can pick any of the rest there between 2 and sort of like 5 years old. So I just think it's not the right metrics to send out when you're still trying to bring shareholder value back. It's not something I would expect to see. And to be honest with you, they could have kept on traveling business class at a fraction of that price there. We had the issue with CORZ Scientific with the previous management team. They were using private jets, and look what happened to CORZ Scientific. It wasn't just because of private jets, but that didn't help. When you're spending this sort of money flying around on private jets,
no,
so, it's not the right.
Well, and I keep thinking back to our conversation. We'll come on to Hut 8 Corp in a second here. I keep thinking about our conversation when Asher took over, the exact opposite of this, saying, hey, you guys can't even spend more than, I think it was $300 or something on a hotel per night. And the optics.
Economy flights, $300 is the maximum for a hotel. And believe you me, Bryce, we couldn't get a hotel in Nashville for under $300. So full disclosure, me and Bryce, we shared a room in Nashville. We had a twin room, and it was about $450 a night for the conference there. And it was a nice hotel. It was within walking distance of the conference. But Hut have got, they set controls out there because we're still in what you call lean period. You just showed one of your slides. It just says now we're just about to go into the bull market. So, we're not quite there yet, and
Not quite there yet.
we should be
Yeah,
thinking
Anthony
about
did
all
make
these.
us. You did make us share a room in Nashville, you guys. We finally managed to get 2 separate beds, which was great. But Anthony told me he didn't snore, so I'll let you guys in the comments decide if that was factual or not. We'll see
Very
what the
factual. Very
yeah.
factual.
Anywho, Bitfarms up next, Anthony. I wanted to get your take here. This one is interesting for a couple reasons. We just recently talked to Ben, which was great. Always a good discussion with Ben. I'm a huge fan of his. They came out with Q2 results. Again, a good, bad update, I guess, to use your terminology there, Anthony. But more interestingly than that, we'll come on to Riot here in a second, is Bitfarms made some changes with board and leadership. So we've talked a lot this year about this saga between Bitfarms, Riot, Riot's position of Bitfarms board entrenching themselves. Nicholas Bontas, was kind of central in the discussion with the Jeff Morphy situation. He's actually stepped down now. So I wanted to get your thoughts on the top article, Anthony.
Yeah, I mean, I think that was one of the key issues that Riot had with the board. There was the performance of the chairman and some of the other directors, and 2 of those directors have now, one of them got voted out at the last AGM, and Nicholas Bonta has stepped down. Now he's the co-founder of Bitfarms, so he was there at the start, and the other co-founder was voted out at the last AGM. So there's enough votes to vote that particular director out. I think everyone in the space seems to be really pleased with Ben Gagnon's promotion from Chief Mining Officer to CEO, and he came on the podcast last week, and he certainly puts in a very, very good case for Bitfarms and what's going to happen this year and next year. So he sets the landscape out there for the company. They've got 4 independent directors now on the board of 5. So only Ben is the internal Bitfarms director. He was actually given director title this week, actually. So that wasn't straight away when he became CEO. So he was chief executive officer. Now he's also a director of the company as well. So he's the only insider director. The other 4 are independent to Bitfarms, which is what you want in a lot of these companies. You want independence, so that people can sort of make points about the company without any sort of they're not be required.
Now, Anthony,
they're independent. Yeah.
Let's just pause here for a sec, because I wanted to get your thoughts. We talk about TeraWulf, the high percentage of insider ownership, the benefits that offers in terms of not being able to be taken over and to push things through decision-wise. There's a lot of invested ownership interest in the company because they've got a lot of their own money in the game. Then you talk about Bitfarms board of directors. They don't have a lot of insider ownership. They do have the independent angle. Can you just compare and contrast kind of which is better from an investment standpoint? Is it good to see a lot of insider ownership? Is that not good? What's kind of the best way to look at this situation?
I think if you've got a large insider ownership, they've got an absolute vested interest in making sure the company does really, really well. And if you look at that TeraWulf team, they've been together 20 years in company that was, they were together in Beowulf. Then they formed TeraWulf together as a mining company, which is an offshoot from Beowulf, this energy company. They've worked together for a long time. They know each other out there. The whole management team has been together a long time together, and so I think it works really well. And you can see they're passionate about the company. They want the company to do well. They're still keeping costs down there. So if you look at the SG&A costs that were on the slide that TeraWulf issued as part of its earnings, really low SG&A, like Hive, another one with a low SG&A cost. So not paying themselves what I call pop star wages and bonuses and all that there. They get paid, they'll get paid, probably as you'd expect a CFO or a chief executive officer to get paid for that type of, industry. But believe you me, there are some that are getting paid substantially more than where they are at the moment, and that's a criticism of of some of the other SG&A costs from some of the companies. It really needs to especially when your SG&A costs are starting to equate to the revenues of the company or getting close to the revenues in terms of percentages. How can that be manageable? It's just not sustainable in my eyes. But Bitfarms, we talked excessively about Bitfarms. They're doing everything right. They've grown significant hash rate this year. They're only just over 6 exahash at the start of the year. They're already over 11 exahash now. They should be at 12, but they've articulated that some of their T21 miners are going to get replaced. And so internal ownership at Bitfarms is very small. It's 1 to 2.5%, something in that sort of area there. So what does that mean? It means they can't vote anything in themselves. So shareholders have the bigger say in Bitfarms, and maybe the shareholders have a bigger say in TeraWulf. But then you'd like to think if your management team own a lot of the shares, they will be doing everything in the interest of the whole company. So you'd like to think that with Bitfarms,
that's kind of the catch-22 of it all, right? Is money talks at the end of the day. You're not going to do something bad for the company if you own 40% of that company. You're shooting yourself in the foot. Yeah. But at the same time, you're also you may have a bias in certain situations.
Well, think about what they've done the last sort of 8 months, TeraWulf. So I bought TeraWulf last year, 2023. I bought it at 52 cents, 48 cents a share when it was getting hammered, and there was even time just before in 2022 when they were really, whether it was going to work or not. So there was a point in time, and Patrick sort of alluded to this last night on the podcast, that there was periods where they were in dire straits and they just weren't getting, the significant appreciation for what they were doing, and the share price is really low, and they had, they basically reached out and they got some bailed out a couple of times. But look at where they are now. Look at what they've done. The one area that people sort of like criticized last 8 months wasn't about productivity, wasn't about management team, wasn't about their energy cost. It was about the debt. And what did they do? They promised to deliver on the debt, and they did. They delivered early on the debt. They got the share price to a position where they could actually use the ATM more, beneficially. So it didn't dilute significantly. I mean, they averaged, I think, over $3 in their recent usage of the ATM. Now, bear in mind, I bought the shares at sort of like 52 cents, 48 cents, a couple of purchases last year, and they've used the ATM over $3. So that's a lot better position. If you're trying to use an ATM when it's 52 cents, you're selling a lot of the company for no real money. But to do it,
6 times more dilution than at $3.
Exactly. And they've got no debt now. So what could shareholders now have? That's an issue. I'm trying to scratch my head and think, what's the issue now with
And I'll never forget, Anthony, that interview we did with Paul, and the way you phrased that debt question. You said, "Paul, when will you have debt in a more manageable situation?" And he said, "Oh no, Anthony, it's not in an unmanageable situation." Now, I wanted to call out TeraWulf. They already have our video actually from yesterday up on their corporate website, which is great. So we had a really good discussion with Patrick Fleury. I put a quote from him up on the screen here. We'll go to Hut 8 and Riot after this, but it felt fitting to move to TeraWulf. So Patrick, just awesome guy, to be honest. I've never met the guy. Great discussion, great communicator. Seems like someone who really gets the business. As you mentioned, Anthony, TeraWulf, this team's been together almost longer than I've been alive. They know each other inside and out, and really seem to function very nicely as a group. He talked about Nazar's role in that, and obviously some of the other key components here. Now, Patrick couldn't stress enough the importance of low-cost energy. We talked actually in this discussion about the Marathon Bitcoin purchase. We talked about some of the IREN power problems or hedging issues that we discussed earlier. But TeraWulf, between their power mix here at Nautilus and Lake Mariner, this access to this nuclear power in the 2-cent range, like you say, Anthony, there's not many holes to poke. This is why TeraWulf is one of my top 3s. You guys talk about our picks. I don't, not to mention you've got port authorities and Amazon wanting to buy out your facilities. Like, there's not a lot to point problems here, I don't think.
No. I mean, I suppose sort of like maybe the one area that I didn't get the full picture was 2025. So in 2024, we know that they're likely to get to their 13.3 exahash, and they've got the building 5 is now being built at Lake Mariner. So, you know, when we were not that long, we were talking about building 3 being completed. Well, you know, building 4, now we're building 5, and they've still got further expansion there. They've got further expansion opportunities at North as well, another 50 megawatts there. But there's no sort of like discussion about future hash rate above 13.3 anymore. So, you know, now it's potentially HPC versus Bitcoin mining. So it'll be interesting when they make their probably first big announcement on the HPC side. I think there'll be an expectation to hear something from that side, you know, relatively soon. They're definitely playing the core scientific playbook. They're not interested in having GPUs or purchasing GPUs as part of the package. They're providing facilities with access to significant power at good rates of power, and that's something that can set them aside, you know, other providers. You know, they're very strong in the energy business. They were doing energy before Bitcoin mining. They're strong in the data center business now because they've got Bitcoin mining. So they've got those 2 areas wrapped up there. So it'll be a case of when will that announcement for 2025 be made? Because probably some of the shareholders are thinking, what's the hash rate going to be in 2025? And now this sort of looks like they're more focused on the HPC side. Are we going to see a sort of a CoreWeave announcement type thing where they get, you know, if you can sort of like say, I've got 50 megawatts of facility for HPC, you're talking, you know, over $1 billion of revenue over a contract period, you know, for 50 megawatts. It sounds not a lot in terms of power, but it's significant for HPC. We just told, you know, 382 megawatts of core scientific is going to get them $6.7 million of revenue. So what will 50 megawatts get you? You know, effectively close to $1 billion over a contract period. So, you know, that's something and they've got sort of 300 megawatts, 400 megawatts available with all their particular expansions. I think they can go to 600 at Lake Mariner. They've got another 50 at the north of the site there, and that's before they even start looking at sites outside of their remit. So, you know, plenty of potential, but I think they're keeping a few cards close to the chest as they determine when they're going to make the next announcement. So look forward to hearing that from TeraWulf.
Yeah, I do too. It was widely kind of rumored, I guess, in Nashville that we'd be hearing something out of TeraWulf soon. Obviously, Amazon AWS is in the discussion. There's a number of hyperscalers. Their Lake Mariner facility, 1,800 hectares, water access, power. Patrick described some of the infrastructure at that facility has been actually overbuilt for what their purpose is now, stuff that just would not be economically feasible anymore. So really exciting and really interesting.
And just a key point so that people are aware.
Yeah, Paul.
Power driving HPC, you get more from power for HPC than you do power driving Bitcoin mining. The amount of power using HPC to deliver significant revenues is far less than what's required to Bitcoin mining power. So, you know, it might be that we start looking at metrics that include value per megawatt in terms of revenues driven by HPC, revenues driven by Bitcoin mining, so that people are aware that actually this HPC business is quite real.
Yeah, most definitely. Another number, if you didn't catch the interview with Patrick, to make note of, their 2-cent rate for the nuclear power locked in till 2028 Q1. So that was another key number there that came up last night, Anthony. Now, I lied to the audience. I wanted to just quickly detour to Soluna. We talk about HPC AI endeavors. This is another smaller player really making a statement in the HPC space. They've got a differentiated business model. They work on partnership financing, project level financing. They work with sustainable energy providers, namely solar and wind, behind the grid to stranded energy, similar to what we talked about in the intro there, Anthony. So Hut 8 and Riot will follow, I promise, but we need to do some service to Soluna here as well.
Yeah, so, you know, a good month of updates for Soluna. The self-mining business, I think we've articulated before, it's actually quite a small part of their business now, and their hosting business is far bigger than the self-mining. So in terms of self-mining, they mined 17 Bitcoin, and that was literally, half a Bitcoin a day if you try and put it into a daily rate. Slightly less than what they achieved in June. And again, you've got to think about difficulty impacts on that there, plus the fact that the month of July was a bit warmer than June, so some of these miners would have had to curtail their energy over that period. Now, in July itself, they did announce, that they'd made, a significant announcement regarding their subsidiary Soluna Cloud. So this is them moving into the AI cloud services industry. And they're now offering this service for enterprise customers and generative AI labs. And these services feature the 512, H100s specifically designed to handle demanding AI work. So they've got this, this small, I think it's 2 megawatts project that they're delivering now in terms of their AI service. And this service itself, they've got the potential now to increase revenues between 38 and 80 million over the next 3 years from their AI side of the business. And so that puts Soluna Holdings itself as a key player in the cloud services market. Also, what they're doing is they're raising money for Soluna Cloud, and they managed to raise an extra 1.25 million. So I've talked to you before about Soluna. Because they're a small company, raising funds is a challenge for them. So they sort of basically put together a project first, work out the sort of like the cost of the project, and then they go and source a partner to help deliver that project. And some of that will be about raising money to get to there. So at the moment now, for their total credit facility, they've got 13.75 million for this addition into Soluna Cloud, and they're being advised by certain companies as to how that commitment's sustainable in the industry itself. They also announced that they've closed another of their projects from a financial point of view. So the financial round for Dorothy 2, which is a $30 million financing project that was led by Spring Lane Capital, that's been successfully closed, and that will fund a 48 megawatt expansion of flagship project Dorothy data center. So it's going to double the current capacity of the current facility. So it's another project that's on the board there. We know they've still got Project Catty, which is 166 megawatts. So again, they're building up the project for that there, and they're going to hopefully announce a partner between now and the end of the year for that project. And this is a company where market capitalization probably hovering around $20 million. But the numbers we're talking about here, I mean, we talked about the AI business delivering $38 to $80 million over the next sort of 3 years. That these are significant amounts for a company of that valuation, and that's just one element. They've got the Bitcoin mining, they've got the Bitcoin hosting, they've got more projects coming online. So they do put out quite a lot of information, as you can see from the screen there, on a monthly basis. So John Belazaire, who's the CEO, makes sure that information gets out there. We'll have him on the channel when their numbers are released, and we'll get your questions to him on that there. But I quite like Soluna. I've got a small amount of Soluna in my sort of like pension fund, which I was able to purchase. It was quite difficult buying the shares in the UK, but I managed to do it through my pension fund. So I've got a few shares in there, which are doing quite nice at the moment. So these updates are coming out quite regularly now, and all looks to be quite positive.
Yeah, it certainly does for Soluna. We've actually got John on the channel Friday afternoon after Core Scientific. Paul just wrote in 122 people watching right now, Anthony. We're at the peak for the day. I hope there's not only 22 likes here, you guys. If there is, come on. It's 2 second. It's free to do. Anthony loves it. We'd appreciate it. There we go. Let's talk about Hut 8 now, Anthony. Then we're going to talk about Riot increasing their insider ownership on Bitfarms. Hut 8. So we actually have them coming on Monday. They've come out with their Q2 results. They came out with this cost to mine a Bitcoin. It is a really interesting one. Sue was actually my first interview in the entire sector. This is a company I've held really since day one. They were a pure play miner. Then they got into HPC very early. They got a big contract with Interior Health in BC. Then they went through this merger of equals with USBTC. It was a long, drawn-out process. Now they've come together. They've replaced their CEO. They've sorted out all these pieces, and it seems Asher has now reassembled the ship. He's building the airplane well in flight, so to speak, and it's starting to look pretty good, I have to say here from my perspective.
Well, Asher said in an earlier podcast this year, judge me on Q3. So we're sort of in the middle of Q3 now. So these are the latest figures out. And, the share price has done okay since Asher's been in the seat there. I think last time I looked, it was probably close to doubled in price since he took over as CEO. The self-mining business is the area of concern for me. They've not really grown that at all in the last few years. There's been no new miners, and I think shareholders are like thinking, what's the forward-thinking plan on that particular service there? One thing they've got access to is they've got access to a lot of energy under their management. So they've got, some of their own power facilities run by power. They also manage facilities on behalf of other companies and all the assets within those facilities. And so, that's one thing they focus on there. So self-mining, again, for this company is actually quite small. HPC, you're quite right. They got into HPC early. They bought the 5 data centers in Canada a couple of years ago. But we've not really seen that side of the business expand. I mean, bear in mind, we've talked about Hive, and yet the updates from Hive and Hut haven't been anywhere as sort of like sexy as the ones from Bit Digital and Core Scientific in terms of the numbers, because when you've got big clients who are prepared to pay big amounts for your service, that's really that's what shareholders want to see. I mean, I'm looking forward to August update from Bit Digital, because that'll have the new additional contract revenues in that update. So they were getting 4.2 million a month prior to that. At full operation, it's closer to 7 to 8 million a month, so that's going to be an increase there. But Hut 8, they achieved good margins, and they're showing you the cost to mine a Bitcoin there at their as at $26,233, and that's excluding the hosting facilities. So that's it's basically the all-in energy cost. So we need to be careful when people say cost to mine a Bitcoin. Some people say the energy cost, some people say the all-in cost. So this is for an energy cost, and actually, that's if they're doing it at that price there, that energy cost, that's quite reasonable, because we've just seen.
Anthony, just apples to apples here. This would be the IREN number everyone's talking about this month.
Well, this is the 3 months ending June. So let's give IREN a little bit of I think IREN were doing.
Gotcha. Okay.
I think it was 36,000 back in May. So during that period. IREN probably operating around about 36,000. So you can see here operating at 26,000, and they're saying that's the all-in electricity cost. That's net of any credit. So that they receive from ancillary services, etc., etc. So that's certainly a good rate of electricity per Bitcoin. If they're achieving that rate there, that certainly puts them in that sort of top quartile of miners, without any shadow of a doubt, because anyone that's doing mining Bitcoin under 30,000 in terms of energy cost is doing really well. It wouldn't surprise me if most of the miners now are certainly mining Bitcoin from energy probably upwards of 40,000. And gotcha. So if you're doing it under 30,000, that's pretty good. I mean, even TeraWulf's price in July was 36,000. So that just tells you.
That's what I was thinking, and they have an extremely strong energy pipeline. Now, I just wanted another quick question here. When you see energy cost megawatt hour 31.71, you could equate that essentially it's 3.1 cents.
Yeah, that's great. I mean, we talk about Cypher at 2.7. We talk about TeraWulf of a blended rate, probably about 3.7, 3.8. That rate there is 3.1. That's 3.2, as close to it. 3.17, 3.2. So that's actually a better rate than TeraWulf. Not quite as good a rate as Cypher, and we'll hopefully be able to go through Cypher's results and see what their current is there. But they constantly came out and said it's 2.7 for them. We've got Tyler coming on the podcast next week, so we'll be able to ask him directly a question next Tuesday when he comes on the podcast. And
sounds good. Hey, now I wanted to pivot over to Riot, specifically just the increase we've seen in the insider ownership here. They're moving up now closer and closer, obviously, to the 20% threshold, Anthony, which was pretty much expected since that poison pill ruling decision while we were in Nashville. Looks like they're going to continue to just push the envelope as close to the 20%, get as many shares before the record date, and then get in a position to vote as many as they can for the upcoming meeting, hey?
Yeah. No, absolutely. I mean,
interesting. Sorry. One last thought. Interesting here, you guys. If you look at the weighted average price, it's $228 per share. So keep in mind they had originally offered $230 to buy out Bitfarms. Now, I'm not saying that was a good offer or necessarily what I would have selected as a Bitfarms shareholder. Again, I hold shares in both companies, but it is interesting to see that they're now buying the shares cheaper than what they originally offered, even though that $230 is no longer on the table.
That's right. I mean, they've been, buying shares at various rates and getting them at obviously cheaper than what they were prepared to offer in the first place at $230. I'm just checking what the price is currently now. So it's $221 at the moment. So Bitfarms price is down today, but they'll keep going. They'll keep buying to get to the 19.9%. And that then gives them effectively when the vote happens to determine whether the directors that are in Bitfarms at the moment are independent enough for the shareholders to agree on, or whether they want 3 other independent directors. Then there'll be a vote on that basis then, and then when the independent directors are in, then they'll determine, internally, whether moving forward, there's a deal to be made. And so, having independent directors who are not aligned to Bitfarms or Riot will be from Riot's perspective. They want to see that as a way forward. Now, we've just mentioned from Bitfarms' perspective, they've got 4 independent directors already out of the 5. There's only Ben. Ben's been there 5 years as chief mining officer. Now he's CEO and a director. So he's the only non-independent director. The other 4 are all totally independent. They have other jobs, and Bitfarms is just one of their directorships. Time will tell, but there'll be a vote in the next few months to determine that the first part of this now is determine whether there's a need to bring in more independence in the form of directors into that company, and then there'll be subsequent following from that there. But having 20% of the company. I mean, if Bitfarms do really well and achieve their targets, I mean, I'm still a little bit disappointed they didn't get to the 12x. That's what Ben has told us why they've had to exchange some T21 machines. Now, he has given us, carte blanche to say 21 by the end of the year, 21 switched on. So, we're going to have to wait now another sort of 5 months, just over 5 months to get to that 21. But for them to get there, so from 11 at the moment to get to 21, that's 10. They're going to have to start increasing quite considerably. Some of this hash rate needs to start going up. I mean, it's only going to have to go up 2 exahash for Bitfarms, but for the likes of Riot and Marathon, their monthly increase is going to be something like 4 exahash just to get to their target. So, some big moves to be seen. And, we've always said which ones are going to struggle to make it. I hope that Bitfarms is the one that struggles. I'm a shareholder in Bitfarms, a shareholder in Riot, and people seem to think I've got some sort of an allegiance with Riot. No allegiance to anybody. I'm here as a sort of like you guys are as a shareholder in some of these companies. I've had shares in Bitfarms and Riot for 3 or 4 years, so it's not like I'm new to this space. I was buying shares. My first shares bought just over 4 years ago in Marathon Digital. That was the first company. So. And I like to think now in the last sort of couple of years where I've got more knowledgeable in the space that I can make better decisions myself, and I let certain people know when I do buy shares and when I sell shares. They're in my Patreon, but outside of that, I don't tend to put on social media when I'm buying these shares or not, but I, for transparency, I've got shares in Riot, I've got shares in Bitfarms, and I can see both options as if they become one big company, the biggest mining company, I can see the benefits of that. And if Bitfarms tend to go all the way and get to 21 and 35 next year and become a behemoth of a miner, I'm going to make money as well from that as well. And Riot will carry on doing what they're doing. They're going to get to 36 by the end of the year and 55 by next year. They're going to be, the biggest miner probably after Marathon in terms of growth. So it seems to be win-win for me at the moment in all these scenarios.
Yeah,
so
really
I don't really see I don't see the downside. I'm looking at a company. Treat this as a football team. So, you've got the manager of one of the biggest teams in the world. They're going after one of the best performing players. Bitfarms have performed better than every miner for most of the last 3 years in terms of performance. Why wouldn't you buy the best player for your team? You don't want to buy the worst player for your team, the team that doesn't perform. And bear in mind, we go back to basics. This is Bitcoin mining. How good are you at doing your job? How good are you at getting Bitcoin from these machines, managing these machines,
operating
in 12 different locations in 4 different countries, and still coming out top miner literally every month for the last 3 years? There's only Hive Digital and Bitfarms. The rest of them are sort of like playing catch up. Those two just seem to, I think maybe end of August, you might see Hive Digital on top. Actually, they've been creeping up this last few months on Bitfarms. But those two interchange. Those two have interchanged for the last 4 years. No other miners finished in the top 2. Those two have been in the top 2 for the last 4 years. So that's likely to stay away all the way this year. So, if you're going after the best miner in terms of productivity, then why not? I don't see a problem with that. Now that the shareholders make a decision. So, when it comes to voting, all you shareholders out there for Bitfarms, vote how you want to vote. It's down to you guys, not down to me.
Yeah,
my shares wouldn't even get me a cup of tea. In terms of if I turned up at the site, I'm a decent share, but I'm not a big shareholder in any of these companies to a certain extent.
No, we're not the whales out there. I hold both companies.
Not having come back from Nashville and seen some of these other shareholdings that some of these other people have got, I am minor, really am, in terms of
they call us minnows. One thing I will say, one thing I did learn, you guys, if some sort of a deal this is not exclusive to this deal, but in public markets, if you've got out of the money options, say you have $20 strikes on Bitfarms and they get bought out at $10, those are liquidated. So just be cautious of that. Again, not necessarily in this situation, but anytime you're playing options, obviously there's a lot of anticipation. Bitcoin, the miners are going to balloon or skyrocket here. Watch those far out of the money options because they may be negatively or positively impacted by a buyout, but just something to monitor there.
Last point to mention, Bryce, on Riot. So people might not be aware, but in their last quarterly update, they had a $24 million appreciation on the fact that the shares they bought in Bitfarms earlier this year had grown in value. So they had to record that as part of their income statement. So
you talked about the aligned interests of
unrealized gain, like the price of Bitcoin going up. They had shares of Bitfarms, and the price of Bitfarm shares had increased to the tune of $24 million in that quarter. So they had to record it as an unrealized gain on their books. And
I almost think of it as additional exahash, right? It's almost like proxy exahash.
It's just, I mean, at the end of the day, I mean, come the day they decide to sell. And one thing you'll say is both of those companies, so in terms of volume of shares, Bitfarms can regularly be at 20 million daily volumes. So if Riot were to start selling shares, and yes, they have to report it within a certain period, but they could significantly sell shares in Bitfarms if they decided it wasn't the way forward, without really, it wouldn't really sort of register on people's radars until they actually announced it to say that they'd done that. So because of Bitfarms' daily volumes is significant. If it was selling 500,000 shares a day and Riot wanted to buy 5 million, that's going to raise more than an eyebrow. But if you're selling 2 million shares a day and the shares are selling 20 million shares, that's not even going to be noticed. No one's going to know because it won't be sold in 2 million chunks. It'd be like 10 chunks of say 200,000, to sell 2 million shares, whatever like that. It wouldn't be done in one go. It'd be done in smaller.
That's why the volume's so important on these companies.
Yeah, but in these big miners, it would be hidden. It would be literally hidden. You wouldn't even notice it until it came out as an update.
Yeah, most definitely. Hey, now speaking of updates, Bitdeer has just come out with their Q2 numbers. We've got Bitdeer coming on the channel this week, Anthony. So it's going to be great to get Jeff back on, Jeff LaBerge, head of capital markets, and get an update on what's been going on here. The Seal Miner was really the big story out of the gate. And we've talked about that quite extensively on the channel, but I wanted to just get your initial thoughts on kind of some of the high level Q2 numbers here.
Yeah. So, I mean, at the end of the day, yes, it's a net loss, but actually these are good numbers from Bitdeer. Good margins. They've got 4 business streams. They made margins in every business stream. So they've got the self-mining, they've got the hosting, they've got the cloud hash rates. They've also got now the HPC business as well. And so, and then this, later this year, they're going to, obviously they're producing their own miner. If that becomes a revenue stream, if the price of mining rigs, increases, it might mean that other mining companies decide they want to buy the new Seal miner because it's a very efficient miner. Their first miner was like an 18 joules a terahash. They're looking to release the 14 joules a terahash, which is then sort of on a par with an S21 in terms of efficiency. And they're doing it in-house. So, they'll make all the savings from that there. So this is quite interesting times for Bitdeer. I like the company for a number of reasons. One is their access to power is bigger than every other miner. So I'll just say that again. Their access to power is bigger than every other miner. They've got access to 2.5 gigawatts of power, and they're working at delivering a substantial amount of that over the sort of like next 18 months. So they've got sites in Bhutan, they've got sites in Norway, they've got 2 big sites that they're building out in the US. One of them's in Ohio. I can't remember the other site there, but these are big sites. These are over 200 megawatt sites. I mean, the one in Bhutan's a 500 megawatt site. The Norwegian site is a big site as well. And so, they're doing things now. They've got the ability to sort of like grow now. They've been on the NASDAQ for over a year, so it gives them opportunities to raise capital a bit easier. They've got a big, significant investment from Tether. So again, that was a positive move. Tether, have given them, I think, 100 million, and the potential for 50 million more in terms of, funds for growth. And so, yeah, it's positive. Yes, it's a net loss, but again, it's one of these where it might be a net loss, but overall a good update.
And
we'll
Jeff's on the channel tomorrow.
We'll get more from Jeff. Exactly, we'll get more from Jeff tomorrow. I don't want to spend too long on Bitdeer, but I like Bitdeer. Bitdeer is part of my portfolio, and I just think if power becomes the game changer in the future with HPC, just think who's sat there quite pretty with the power compared to other miners at Bitdeer. So we talked about Core Scientific. Core Scientific, I've got access to 1.2 gigawatts. Double that and add some more, and that's Bitdeer. Just put that in perspective. So Core Scientific, I've got access to. They operate at 832 at the moment in terms of megawatts. They've got access to 1.2 gigawatts. Bitdeer 2.5 plus gigawatts. No other miner's got that level.
No, they certainly don't. Now, Anthony, I zoomed in on the camera there so I could put my hoodie on. It's a little bit cold in here. It's a Bitfarms hoodie, you guys. I don't know if you can see that. I wanted to do a quick shout out of all the swag I've got from all these companies. Bitfarms has the best hoodies, both zip up and pullover. And the next company, Bit Digital, actually came out with the best hat, I would say. Sam Tabar had some pretty nice swag. We got some Yeti mugs, we got some hats, some shirts. So we'll jump over to Bit Digital next.
The flask, Bryce.
What's that?
The flask?
The flask. No, that's a personal secret, bud.
Oh, right.
Yeah, no, we don't talk about the flask. Just like the airplane, those free airplane tickets we got from CleanSpark, we don't have to talk about those either. In all seriousness,
we got seats on the opening flight, didn't we?
There you go. Yeah, first flight, front row. Bit Digital. So
big fans.
There you go. Same slide as last week, you guys. We are in the process of working with Nick Graves He's the guy who coordinates all the interviews for us with Sam Tabar. They're coming out with earnings, I think, on the 20th, Anthony, and or something. I think the 20th, and we're going to try and coordinate something shortly after that. So, news to come here. Bit Digital, big name of the game is the Ethereum play, the Ethereum staking wheel or flywheel that Sam Tabar has talked to us about. However, Ethereum has taken quite a hit alongside Bitcoin over the last few weeks. Any concerns with this Ethereum exposure at this point?
No, if you remember when the ETF started, there was a bit of a lull with the Bitcoin price as well. And, I just think there'll be it's a sort of like a lull before the storm, and then maybe the Ethereum price will catch up. But Ethereum's actually outperformed Bitcoin. You go say Bitcoin over the last, say, 5 years, Ethereum's outperformed Bitcoin over that period. So this is nothing to be overly concerned about. We've talked before about the big cake. So, Bitcoin itself, 54% of the big cake, Ethereum about 14-15% of the big cake. That takes you close to 70%, and all the other 13,000 coins add up to 30%. So for me, not too much of a big issue. I like it. I like Bit Digital. They are a Bitcoin miner, but now it appears their revenues from the HPC contract that they have with the anonymous client is bringing in more revenues than the Bitcoin mining. So if you look at what it produced in the month of July, their revenues for Bitcoin mining were about the 4 million. The revenues for HPC were about 4.3 million. So that just tells you at the price of 64,000 a Bitcoin, they're getting more revenues than in AI, and that AI revenue is going to add another at least 3 million to that on every full month they are going forward, delivering their increased position in HPC. So they're going from delivering 1,048 to 2,096 HPC. So they doubled the amount, and it's a $92 million contract per annum, as opposed to a $50 million contract analyzed revenue. So 92 million over a year. That's 7.5 million a month, and that's from 4.3 to 7.5. Good margins. Again, good length of time in that contract, 2.5 years remaining. So Sam's in a good position, and he still wants to grow the Bitcoin mining. So they've got a target of 6 at the end of the year. So we can see how that's progressing. We've not seen any updates on the Bitcoin mining growth in terms of machine orders or anything like that. They're operationally about 2.5. I know they've got more hash rate than that. It's probably close to 2.8. So they need another 3 and a bit in terms of hash rate for growth. But maybe some of these revenues that are coming in now from their AI service can be moved across to pay for some of the miners they'll require to grow. So Sam's he's always looking at things from a margin perspective, so he'll keep his eyes to the ground, and he doesn't do things without thinking it through and making sure that he's doing everything right for not just for Bit Digital but for shareholders as well. Look at that liquidity at the bottom there. I mean, yes, the prices were at the end of July, and those prices have changed a little bit since then, but it's still high liquidity. And if you think about what their market cap is today, it's about 340 million. So even if that liquidity was, say, down to 160 million, that you take 160 off the 340, you've got a company that's delivering 92 million in revenue in HPC and about 50 million in mining. So that's 140 million of annualized revenues for an enterprise value of about 180 million. It's just you just can't compute those numbers.
And to jump in there, Anthony, that's why this would probably be my other top 3 pick right now, you guys. BTBT. I think they're just really not getting valued by the market properly at all for the business they have.
Maybe when we see August update with the extra revenues coming from AI, and bear in mind we talked about Core Scientific and all these other miners. They're the ones getting the revenues at the moment. All these have still got to get those revenues. So when we say Core Scientific, those revenues come in first half of 2025. So that's still sort of 7, 8, 9 months away. Bit Digital are doing it now. They're getting it now. and they just doubled. They've doubled the size of the business, and they're from 50 to 92 million. And they only started, in beginning of the year. It was 35 million initially. So they've gone from 35 million initial contract to 92 million. So, that's some growth. And for a company this size, bear in mind, Core Scientific, go back to your slide if you wanted to, just over 2.2 billion in value today, in market cap today. So, this is at 340, Core Scientific 2.2 billion.
There you go.
1.3 billion, yeah.
Yeah, not to mention putting together these great hats as well. Here's the hat right there, Anthony.
Nice.
Digital. There you go. Great market cap slide though here, you guys. And two others we wanted to talk about on the lower end of the market cap scale here, SATO Technologies and Gryphon, Anthony. I'll pull up SATO first. Slide 21 here. Just give me 1 second.
Yeah, I can just go through. I'll talk through what happened in July very quickly. So they mined 11 Bitcoin, again, average of about half a Bitcoin a day. Again, it was slightly less than what they did in June, but they did have an incident in June, which impacted their hash rate. So it affected probably about 10-15% of the hash rate. So they couldn't operate using all their hash rate for July. They've now nearly completed the reconstruction of that affected section, and they've started to acquire some S21 pros for that 11 petahash that needs to be put back in operation. So they're going to have some more efficient mining machines replacing the ones that were damaged in the incident. And so what that means is they'll get back to their full operational hash rate very shortly and be more efficiently mining. So bring down the energy cost of doing that. They sold 21 Bitcoin in the month. Again, it was nearly double what they produced, but they've still got a hodl of 45 Bitcoin. So this is a company that's probably valued maybe between 15, maybe $16 million, and they've got something like 3.5 million in terms of Bitcoin and treasury on the balance sheet at the moment there. So they've got money to keep them going through this challenging period until the Bitcoin price can rise.
Yeah, another smaller miner on here, Anthony's with a hodl, Gryphon at 21. It's interesting to think companies like Gryphon have more Bitcoin than someone say like IREN, for example, or TeraWulf. We also had a specific question about Gryphon, priding themselves on low-cost mining. The question is that all in? And it's actually a good question, Anthony, because we're starting to see a lot of these like cost to mine a Bitcoin metrics, and the categorization or the way in which companies include costs in that category are a little bit varied or not necessarily consistent, hey?
Yeah, the one thing I'll say though that probably supports Gryphon mining in that context is they have got probably a good hosting agreement, and yes, they'll be paying the energy cost and they'll be paying a hosting fee for being part of that agreement. So they don't have to have any staff to deal with this. So there is just literally 3 of them in the whole business. So that cuts down all those operating overheads. We talked about Riot. Riot have got over 500 staff. CleanSpark will have 200 or 300 staff. IREN have got over 300 staff. These companies have got a lot of staff. You've got to pay their wages. And even if you said they're not on, brilliant wages, they'll be on decent wages, and that will be a significant cost. Now, Gryphon aren't paying wages because there's only 3 of them. We've had this question before about whose turn is it to make a cup of tea, and there's only 3 of them in the company, and so having 3 means you don't have infrastructure for administration costs as big. You might be able to work from 1 or 2 offices. Some of them might even be working remotely, so that even cuts that down there. You don't have the big staffing bills, so you're putting everything into a hosting fee. So you're paying a company to do that service for you, and that actually could be quite significantly cheaper. So when they say like the all-in cost there, is quite comparable, I think it would be comparable with some of these other miners who are on low rates as well, because it's they haven't got all those costs. They don't have to worry about all those costs. It's quite a lean business there, and bear in mind, those 3 guys there have probably got more experience in the mining industry than some of the other management teams that we talk about regularly. They've worked for the likes of Riot and Marathon Digital in the past. So they come with a reasonable wealth of expertise with them, and also, if I remember rightly, Rob's been involved in sort of like in the markets, especially with the likes of gold, so he understands asset valuations and understands all that side of the house there. He's been in that space for a considerable amount of time, so he brings with him that that wealth of knowledge there. For me, the key point was about these number of conversations and the due diligence on some of these 20 to 25 things they've been looking into, and when we're going to see some of the outcome of that due diligence, because for the first sort of 7 months of the year, we haven't seen the hash rate grow. We've seen Bitcoin mined obviously drop in terms of production because of the difficulty. We've seen the Bitcoin price increase by less than 50% now, if you look at what today's price is compared to what it was on the 1st of January. So we're not seeing growth to compensate for the reduction in actual revenues, which have been obviously because of difficulty, which has impacted the amount of production they've managed to do. So yes, the Bitcoin prices rise, but it hasn't risen quickly enough to compensate them for the loss of production.
Makes sense. Well, Anthony, we're through our list here. We've got a final question about Argo. I don't know if you want to, I'll bring up the market cap slide. We can close out here. Argo, I know, is one that you traded way back initially when you got into the game, Anthony, in the old time days there. Their market cap sub $100 million. We get a few questions about Argo, Sphere 3D. These are not ones that we generally cover, not ones that I personally hold, but I don't know if you have any thoughts on Argo yourself.
Yeah, so, I mean, the issue with Argo was they were one of these miners that thought they could, run before they could walk effectively in the space. They made a few bad decisions in 2021 where they weren't able to. One of their orders got cancelled for some miners, and they raced out and got another order, but they ended up paying a price for that order. They bought some Bitcoin in 2022, ended up selling it. Their debt was quite significant. They thought the Bitcoin price was going to save them, and it didn't. It went the other way around. So they had a lot of debt problems. Now, turning that around, they brought in new management team. They got a lot leaner. They've got rid of a significant amount of debt. In fact, all the debt that Galaxy had with them. So when Galaxy gave them the 11th hour help with regards to buying the Helios site to keep them out of Chapter 11, they also gave them, I think it was like at the time about 35 million, and basically in a cash in a loan to help them continue operating. And over that period now, so you can think the last 18 months since Galaxy did that, or probably 19, maybe close to 20 months ago, I think it was December 2022, Argo have been chipping away at that, and they finally paid all that 35 million back. So the interest now that they've will have to pay now is only based on the notes. They have 40 million of notes, which I believe have got a couple of more years left to go. So it's, I think it's I'm going to say 8.25%. So 40 million, 8.25%. That's in simple terms 3.2 million a year in terms of interest payments they'll have to make on those. So they're not out from the woods yet. It's still sort of like nip and tuck. But what I will say is the management team in there at the moment are doing things a lot more in a positive way to get that company through some of these bad times that they've had to go through. They've had to release staff. They've really gone, what I would say is become one of the leanest miners because they've had to sort of like face things hard. In a similar way, Bitfarms did something like this as well when they got 160 million of debt, and at that time I think Argo's debt was over 100 million. So Bitfarms had at one point a bigger mountain to climb, and they went at it in a really, they were selling everything just to get there. So there was no growth for like 2 years. They were selling things to get that debt down. They finally did it. Look at where we talk about Bitfarms now. They're not a $300 million company. They're a $1 billion company. So, TeraWulf, when they had debt, they weren't a $1 billion company. Now they're a 1.3 billion. Things change. When that debt's, sorted, an extra light. And I think Argo's stock actually sort of like has seen a few green shoots lately. And I think because of that news of getting rid of the Galaxy debt, because end of that day, if they don't pay Galaxy, the debt is against the machines at the Helios site. So Galaxy would just turn around and say, just leave the machines where they are, guys. We'll just carry on from here as part of our own facility. We own the site, and now we'll just own the machines as well. So kudos to Argo for doing that. That was a positive news update, but they're not out of the woods yet. They've still got the 40 million to do there. And actually, yes, it could be the 40 million could be converted into shares, but then again, it's like a massive dilution for shareholders. I mean, that you can see the value there at today's value at 80 million. That would be like a 50% dilution of the company. I don't even know what the conversion rates on those shares are. So I don't want. You're asking me a question where I've done no research recently into Argo. All I've seen is some of the recent updates, and I just pass a sort of like a passing glance, like I do at Soluna the miners there. I mean, it's hard focusing on 15 or 16 miners. There's actually about 30, 32 public miners out there. Can't possibly do them all. And so
why not, Anthony? You don't need any sleep over there, bud.
I could do night shifts as well.
You could do night shifts. You could do a little bit more.
If only these guys knew that I think it's like 6. My wife's she's 5 hours ahead of me, so she's covering stuff in the morning. I'm covering stuff. You're coming online. It's like we've got things covered about 16 hours of the day at the moment. We're doing quite well, so we just need that extra 8 hours covered, and we've got everything online. So,
as they say, the sun never sets on the power mining empire with Anthony and his helpers all across the globe here. Anthony, it's been 2 hours and 30 minutes. You told me we were going to go for an hour today. You've done it again, buddy. I don't think we're going to be able to do a live stream under 2 hours here. Do you?
I think because we're only doing one a week at the moment, maybe an option would be to do 2 1-hour ones a week, something like that. Maybe one on a Wednesday, an hour at the weekend, or something like that. Actually, you guys listen at the moment. What are your views on the time of the podcast, and also the length of the podcast? Would it be better to do 2 shorter ones, or are people happy now with the Wednesday one being as long as it is? And yes, you can always catch up, and we're going to start putting in some of the timings for each of the mining stocks, so people can then jump to that one there rather than having to sit through. We'd like to sit through all 16, but maybe. Maybe
you have a life as well. Who knows?
Maybe the life as well as we haven't got at the moment. We're looking. We're all
and I'm just bugging you, Anthony. I do like the full the marathon 2 hour, 2.5 hour ones on Wednesday, because it is nice to talk about everything all in one go. We're still
maybe we should reach out to Marathon to sponsor us on these Marathon live updates. Would that
there you go.
There you go.
We're still at 115 live concurrent viewers, you guys. So thanks so much for sticking with us the whole time here. Make sure you hit the like button on the way out. It really does put Anthony in a good mood over there in the UK. It's just about his bedtime. We got to get him down to bed in a good mood. Anthony, I'll let you know any closing thoughts. So we've got a number of interviews here remaining this week. I'll bring that slide up. I think it's slide 6. And then you can just give your closing thoughts. Bitdeer tomorrow, you guys, with Jeff LaBerge, head of capital markets. Make sure you get your questions over. Then Soluna and Core Scientific on Friday. Same thing there. We ask your questions. So whatever you'd like these guys to be put on the spot or grilled about or whatever, let us know. Hunt and Hive on Monday, Cypher Tuesday, and then the immersion specialist on Wednesday.
Yeah, no, we've got some great podcasts up. I mean, I want to reiterate as well, we've had some great podcasts already this month. If people have missed the ones we had with Jason Les at Riot, we've had Ben Gagnon at Bitfarms, we had Patrick Fleury, a great update from him yesterday. Patrick, I mean, is a CFO there, so not many people have seen Patrick on the social media. He doesn't have social media accounts, so it's difficult to get him, but he's one of the most respected people in the space. 25 years in the finance space. He knows the ins and outs of what it is to be a good Bitcoin mining company, and he nailed it last night for me by articulating about the power and having a good power cost and delivering on that power. That puts their company ahead of quite a number of their peers in terms of, got to keep that cost down, make your business viable. It's a challenge at the moment. It really is. And, the ones that are coming up, I mean, I'm looking forward to Friday. We'll get Adam on the show. I mean, that's going to be, just great to get the positivity from Adam He's probably had an extremely busy week this week, with earnings announcements, and then he's on literally probably interviews probably 5-6 times a day. And we've managed to get him on the channel this week. That's really good. So kudos to CORZ Scientific for giving us that opportunity. Really appreciate that. We've got Tyler on next week. So that's the first time we've had Tyler on the podcast. So we'll try and do a real in-depth one about Cypher, get some of the really good questions to Tyler, because we don't want to sort of we're not here to ask him his favorite color, what he had for breakfast. We want to make sure we dig into Cypher and get the real ins and outs of what they're doing there, because they're doing something special. Let's not be honest. If another miner quotes you as a good miner, and TeraWulf last night quoted Cypher, and they're not the first time. I think Ben also mentioned about Cypher as well. Although, when you start talking about your peers as doing things well, you've got to pay a little bit more attention to that. I'll give you a little insight here. I was in Amsterdam last year, and I got the chance to have spent some time with Zach Bradford from CleanSpark, and I asked him a question. I said, "Look, who do you look up to in this space? Who do you like in this space? Who's doing a great job?" You know what he said to me? And people, will wonder about this. He liked Riot Platforms. So, we know that, I'll be the first to hold my hand up. The last 18 months in terms of production has been absolutely, one step from disastrous. It's been unpleasant to see every month. The last few months I've changed. I think the green shoots are having been there and seen 2 updates since we've been there, and we can see the green shoots. That's a positive news story. I can see that one going through to the end of the year, getting to that hash rate target, 36 exahash now by the end of the year, not 31.5, 36. So they've increased the hash rate. They will get there. So mark my words, December 2024, they'll be 36. 55 next year, and that's not even taking any sort of discussion about Bitfarms into account. They're just planning their own growth at the moment. If Bitfarms happens, it happens. It's a deal. I like what Bitfarms are doing as well. Ben as a CEO, I'll go back and say, he wasn't my choice on the grounds that I thought they might go for someone with a lot of experience as CEO, but I can understand with Ben's knowledge, and Ben was actually, take a step back, Ben was the voice of Bitfarms for 4 or 5 years. When they do all the conferences, it was Ben on the stage. It wasn't the CEO or the CFO.
Exactly.
It was Ben.
Yeah.
He was the one promoting Bitfarms. So, you can see that the positivity of him being in that position there has given that company. So there are a lot of good news stories. We can talk all day about CORZ Scientific, because everything they've touched this year has turned to gold. Adam, again, when he was appointed, one of the most respected people in the space, and he'd worked alongside a lot of these miners in his previous role in relationships when he worked in his previous job there. So he knew a lot of the business there. But considering he's one of the youngest CEOs in the space, and the way he articulates the strategies and the performance of that company, you'd think, it's an experienced head on those shoulders. Make no bones about it. And you can see that he's got a great team around him. We've been fortunate, and actually we can say the same for Ryan as well. Both teams there, and there were big teams at both locations when we went for those visits. I felt really comfortable that both companies are in good hands in terms of what I see at those sites, the potential, and there's a lot more to come. And let's leave it there for today.
Yeah, let's leave it there, because Mark's right. My wife's calling Anthony, wondering where the hell I am, and I am rejecting her call. I probably talk to Anthony more than anyone in the world.
I do talk to Bryce more than I talk to my wife, and it's the lawyers have actually put it in the papers, actually. So
okay, well, let's leave it there, you guys. Awesome stream. Thanks for showing up, Anthony. Great discussion as always. Hit the like, subscribe to the channel. We'll see you guys back here tomorrow, kicking off